acting CEO is unfortunately not in the room at the moment, but I'm told he is on his way, as well as Mr. Willem van der Steen, who is from the DTIC side, as well as a board member. We do have the chairperson, I'm informed, of the board of the ECIC, who has joined the meeting online. We also have the acting DG, Dr. Susan Mangole from the DTIC, as well as the CFO, who are online. And next to me is my colleague Justice, who is the acting DG for the incentives branch. And that's the team from the DTIC family side chairperson. Thank you very much.
Thank you very much. We will now hand over to the NEF as per the prescribed time in the agenda, which has been shared. Over to you, CEO.
Thank you. Good morning, Chairperson and honorable members of the committee. As indicated, I am Buhle Tonise. I am representing the board, and with me on my left is the CEO, on my right is the CFO, and right at the back is Mr. Dan Van Brentjes, who's been with us for a month now. He's the regional manager for the Western Cape. Today we are presenting the APP for the financial year 2026 and 2027 and the next 3 years. We would like to take the opportunity to thank the ministry as we are confident that what we are about to present today, it went through a rigorous process, and we are proud to say that it has been approved by the ministry. And the APP, as indicated, will focus on the programs which look into the development,
recording in progress,
creation of jobs, and especially women and special representation, because we know that we might be able to execute our duties and look into our mandate, but then if it doesn't have any impact, then there's certainly no purpose for it. We also want to extend our thanks to the committee for the rigorous and the constructive criticism and inputs, because we are of the view that if it was without your assistance and your honorable chairperson and your committee, we wouldn't be able to know what to put together. And we hope that even today we would have those inputs as we continue to take them into consideration and ensuring that we deliver what is expected of us. So over to the CEO through you, chairperson. Thank you.
Yeah, just before that, thank you very much. We had an oversight to acknowledge the board, and apologies for that. Thank you. Over to you, CEO.
Thank you very much, Honorable Chairperson. Good morning, Chairperson, and good morning to the honorable members, and also good morning to the colleagues from the DTIC, as well as Ms. Tonis and the colleagues from the NEF. And the colleagues from the ECIC. So we are honored, Chairperson, with the opportunity that we're given by the committee to present the NEF's APP, focusing on the 2026-2027 financial year. So this is a forward-looking APP and key areas that the NEF is going to be focusing on in this current financial year. So how we've structured it, Chair, is that we are going to touch briefly on the NEF mandate, and then we will also go through the programs and the delivery action that we have as an organization, and also how we have translated those programs into measurable outcomes. And in executing that, we will also discuss with the committee on how the NEF is looking like from a financial point of view, as well as the availability of capital. In terms of the mandate, the NEF mandate is derived from the Constitution, mainly Section 9, which is the equality clause of the Constitution, which says that government must take measures to advance people with disadvantage by unfair discrimination. The BE Act also deals with this issue, and it actually makes the point that the South African economy excludes the vast majority of the people from participating in the mainstream of the economy, and also from having advanced skills. So the economy, as a result, is performing below its potential because fewer people are participating in the economic activities in the country, and many people have low levels of income, and they are unable to become economically active. Now, the National Empowerment Fund Act of 1998, it actually, even then in 1998, it touches on the principle of a government of national unity. And it says the government must find ways to distribute wealth. It must boost SMEs. It must apply affirmative action and also implement genuine GPE. So the NEF's mandate is focusing solely on advancing VVE. And we do that by promoting business ventures that are owned and managed by Black people. We seek ways to create employment opportunity, and we implement transformation, and we also work with partners in order to facilitate market access and deploy that capital in a meaningful way to ensure participation of Black people in the economy. So the issue of transforming the economy, Honorable Chair, requires intentionality, both from a policy intent and also from a practical implementation point of view. And as the National Empowerment Fund, within the resources that we have, we play a role in bridging this gap and shaping the markets and deepening the inclusion within the economy. Okay. So we implement our programs within the policy framework of government. And the policy framework that we're working within is the industrial policy of government, starting from the medium-term development plan, because we anchor our KPIs in each year from the priorities of government, and that's where we get our direction as an organization. And we also implement the industrial policy as well as the gain and the IPED policies of government in order to achieve the structural changes that have been actually stipulated by the government in those policy documents. And in delivering this mandate, then we seek ways to stimulate investments, to achieve transformation, and to create demand and reform, and with the aim of achieving economic outcomes and implementing the inclusive economy. Now, what is the role of the NEF within the South African growth agenda? What we seek to achieve is to play a role in industrialization. We want to play a role in creating industries and also creating jobs and ensuring inclusion. So how we've done this, working together with our shareholder, we've dealt with it in a programmatic approach. We come up with programs, and the programs are actually assisting us in order to ensure that there's focus. Because in the absence of that, we will implement a lot of initiatives and we won't be able to see the real impact of what we're doing. And hence we focus on programs like the Black Industrialist Program, the Aggregator Program, the Transformation Program, the Skills Development Program, SME programs, Natural and Cultural Development Beneficient Program. I'll talk to some of these programs, Chair, as in the next few slides. Now, the APP, it reflects, therefore, this current financial year, we are shifting from just having funding activities, but to also do our activities in a manner that focuses on measuring the economic outcomes. That's why even when we look at the indicators that we put in place, I think the minister has been very clear that he wants indicators that show outcomes and that are explicitly linked in terms of the capital we deploy and the number of jobs that we create and how we're actually achieving the structural transformation. I've already touched on what is contained on this slide, so I'm not going to repeat it. It talks to the priorities of government as stipulated in the GAIN strategy. And I think what I want to say here is that as an organization, manufacturing and industrial sector, so there are specific sectors that we believe are going to give us what we want to achieve. So in other words, we're saying that we are not going to be doing everything, we've got limited resources. So we have to be directing them towards specific sectors that will give us the outcomes that we're looking for. And hence, we chose the sectors that the government has highlighted as the sectors where growth is going to come from in terms of the research and the documents that have been made available. Those include sectors like agriculture and agro-processing, the manufacturing sector, mineral beneficiation, business process outsourcing, including the call centers, the digital services and the financial services, the tourism sector, the creative industry, which includes the films, the renewable energy sector, the circular economy, and the green manufacturing sector. Before I get to the KPIs, Chair, I just want to maybe give some examples as to how we've implemented some of these programs, because we are going to continue implementing them in a manner that we believe is going to give us the outcomes. For instance, on the Black Industrialist Program, I just want to make an example by one project that we did, which is called the Mandini Group, which operates within the sectors, that in the tire recycling sector. And this business, we funded it for about 48.5 million rand. And it is a business that has assisted us to create 141 jobs. And it actually operates within the entire tire recycling value chain. And there are challenges that it has experienced, but as the NEF, what we said is that the businesses we support, we provide them the necessary support and we stay the course with them. We work with them through the various challenges that they go through. So when they go through difficulties, we actually come up with measures to turn those businesses around. And we are very Chair, honored to say that this business is actually has come through those processes and is still employing the people today. Now, then I talked about the program that we call aggregation. Aggregation is a program where we anchor a market, because what we are saying is that one of the critical market failures when it comes to BEE and transformation is that Black-owned firms don't have access to markets. So in addition to utilizing the markets that exist, we are actually creating new markets that will utilize as engines in order to give opportunities to Black businesses. And for example, the Mpumalanga Fresh Produce Market, which is a government initiative, and the NEF, we've provided the funding in order to operationalize that market, and that is going to strengthen the agriculture value chain. We have started as the NEF to fund the primary agriculture firms around Mpumalanga. So if you look at the other provinces like Mpumalanga and Limpopo, they actually go to the fresh produce markets in Tshwane and in Johannesburg, and then the produce are actually transported to those provinces, which is ironic, Chair, because the produce in those markets actually comes from those provinces and gets transported to the markets and then back again. So what we're saying is that in creating the market within that economy where these are produced means that the job as well as the production as well as the market aspects are happening within the Mpumalanga province, which then assists the government in order to create jobs in the areas where other people are, not only in the economic nodes within the country. On the issue of skills development, we do have a program that enables labor absorption. So what we did working with our shareholder ministry is to come up with a program whereby we raise financial resources from partners like the SETAs as well as other private sector entities. And through those resources, we are able to support young people, particularly the graduates and then unemployed, people who do not have job experiences. And we use the NEF invested entities in order to create those opportunities, because we are able to place young people within those entities. And we also work with private sector companies. We continuously on a drive to speak to the private sector in order to create these training opportunities. And over the last year, it was the beginning of this program, and we started it around August last year, and we managed to place about 932 people in jobs, which showed us that these opportunities are actually possible, and will create these opportunities. And some of the people that were placed in those jobs, they've since left those employment opportunities because they secured permanent employment because of the experience that they received. So what he's saying is that in this program, we are now going to increase it, and we're actually going to be starting with a minimum of 2,500 jobs in this current financial year and scaling it up over the next financial years. Now, the other program, when I talk about transformation and aggregation, I want to make an example by one called the Drakensberg Food Processors, which is a apple juice manufacturing plant, which is located in the Maluti for SEZ. It uses blended financing. We received grants from the DTIC in order to refurbish the SEZ through the incentives branch within the DTIC. And then as the National Empowerment Fund, we also provided about 50 million rand into that particular project. And Heineken have also provided funding there because they're going to be an off-taker to that particular product, because all the juice that's manufactured there is going to go into the value chain of Heineken. So what we are saying here, and this is the principle that government is talking about leveraging the enterprise and supply development programs of companies, is that working with the private sector, we can create these initiatives, because the private sector is not simply making financial resources available, but it is also opening up the market and helping the government in order to transform the economy and create the jobs. And in this particular business, a minimum of 91 new jobs will be created in the Free State province. And then maybe before I go to the KPIs, Chair, the last project I want to talk about is what we call JACFEN. It's a project that is in KZN. And what has happened there is that in the ECIC Industrial Park, this company had actually closed down. It had shed 365 jobs. So with the funding that we provided an initial seed of 5 million. We were able to bring back a minimum of 82 of those jobs. And now that project has been ramping up, and it is sitting at 191. A project that was actually at a stage of closure about a year or two ago. So what we're saying is that one of the areas we're focusing on is reviving the industries that were closing or the companies that are in distress, because we are saying that we should not only focus on creating new firms, but also sustaining what already exists within the economy. I just want to go now, Chair, to the KPIs. So, but what we're saying here is that we are scaling impact and we are ensuring that we leverage financing. So as the NEF, we've got limited funding. But what we're saying is that working with the partners, we are able to stretch our rent. We are able to reach more beyond the balance sheet of our organization. And we are able to ensure that we link the projects and we act as a catalyst. Because some of the people that we support, they are not able to go and open the market themselves. So it is going to take the government through entities like the NEF to make those opportunities available. And hence we've aligned our KPIs to job creation, investment, and transformation. Going to the actual KPIs, Chair. So we structure our KPIs based on the available resources. We spend a lot of time with the DTIC working through the KPIs. And what we're saying is that we have to measure what goes into the economy, but we also have to measure the impact of that. So for instance, when we talk about dispersing funds into the economy to businesses, and you can see the numbers there, we want to see how much that funding has resulted in the number of businesses that we funded, how many, and the businesses are categorized in various structures. We've got what is known as black industrialists. Those are the manufacturing and the industrial projects
we are saying in the upcoming financial year, we will support a minimum of 80 of those businesses. And in the same year, we will support a minimum of 18 aggregators. Aggregators are those firms that we use to create markets. And the number 18 as starters working with the DTIC, we said we will create at least 2 aggregators in each of the provinces of the country, and hence the number 18. And then when it comes to SMEs, this APP is a shift from previous years, Chair, because in total, for instance, in the last financial year, we had a target of about 150 transactions across all programs, being the industrialists, the aggregators, and SMEs. But we are saying in this coming financial year alone on the SMME target, we will be focusing on 173. So, which means that we are saying that we want to see the scale and the impact of what we are doing. We don't want to focus on specific firms, which not just focusing on numbers. We want to see these firms in the different provinces in the country. And we are saying that we are also going to be focusing on projects that are playing a role in the tourism sector. We will be spending about 125 million rand in order to support tourism establishment. And we've also noted, speaking with the DTIC, that the challenge in the film sector. So we are in the process of engaging the DTIC in order to come up with a solution. So how the solution will work is that the NEF will make resources available, and then the DTIC will also make resources available, and then we'll seek resources from other partners in order to be able to support the activities within this sector. And we did commit to say, as starters, we will support at least 5. I know the number is low, Chair, but what we are saying is that as we crystallize the conversation with our colleagues from the incentives branch within the DTIC, then we will review the numbers, because we are saying that this sector, we need to keep it in our APP and we need to continue to support it. In terms of job creation, we have broken down jobs in terms of new jobs created, the jobs that have been saved. It includes jobs from companies like the one I talked about, the jet firm, where a company had retrenched or where the company is retrenching, and we save those jobs. And then also the number of youth jobs. So these are training opportunities like the internships as well as new entry-level jobs. So what we're saying is that in terms of new jobs created, we will support a minimum of 4,200. The jobs that will be saved, 6,300 in the next financial year. And in terms of the number of youth job placement, will support of a minimum of 2,500. And these numbers are increasing over the next 2 years, over the MTEF period, because we are saying that we need to continuously increase the impact. And we will review the targets, Chair, at the time when we are able to leverage more resources in terms of the other transformation initiative that the government is working on. Because we are saying that over and above implementing this APP, we are working at other ways of ensuring that we work with the private sector and government in ensuring that resources are actually pulled together and we are able to come out with initiatives that help us to aggregate and also to create more jobs. In terms of the youth job placements, we are saying that we are on a drive in order to raise funding for that. We've raised quite significant funding from various partners, including government, being the SPITAs as well as the private sector company. We are saying that if we raise a minimum of 75 million rand over this financial year, then it will assist us in order to increase the number of jobs in the next 2 years. When it comes to other transformation initiatives, we are actually going to be focusing on the percentage that we disperse to businesses that are owned by the youth, and we will be ensuring that a minimum of 13% of what we do goes towards youth-owned businesses. And we will also be supporting businesses that are owned by people with disability, and we will ensure that at least 2% of what we do goes towards those businesses. Women empowerment continues to be a key focus area for the National Empowerment Fund, and a minimum of 40% of our funding will go towards those businesses. We're also saying that as government, it is important that we become the role models when it comes to BEE, and ensuring that we play a role in BEE across all levels, in procurement within the NEF itself, the skills development, as well as ensuring that companies have ownership. So we're saying that we're currently sitting at a level 3 BEE ownership, and we are targeting to increase that to a level 2 and a level 1 over the next 3 financial years. And now what we're saying, Chairperson, when it comes to, as we continue with transformation, we are actually assisting the DTIC in operationalization of the transformation fund. So I won't be talking to that because that is a project that is actually spearheaded by the minister. But what I wanted to mention here is that we do have a KPI in our APP in order to work towards the full operationalization of that fund over the next quarter. And also, we are working on ensuring that we raise third-party funds, because what we're saying is that we will not only be using funds from the NEF balance sheet, but we are actually going to be leveraging on what we are raising. And in this financial year, we'll be raising a minimum of 900 million rand from the private sector and other government entities. Because what we're saying is that there are transformation initiatives in the country, but they are not coordinated. So the government needs to work towards coordination and aggregation. And this is a process that we've begun engaging the various partners on in order to ensure that government is able to realize this. So, Chair, another KPI for us is the inducing of demand. So what we are saying is that the companies that we have in our portfolio, we want to see them increasing what they have. So historically, what we've said is that we want to see the revenues that these companies generate, and we want to see that increasing over the years. And hence you begin to see that this current financial year, we use the 6.1 billion rand as a base, and we are increasing that over the next financial year. We're saying these companies need to grow. So what it means is that they are growing in terms of their revenues, which means that they are employing more people, and some of them are even exporting. And hence we've got the KPI for exports to say the value of exports from the businesses that we support needs to increase over time. Now, in terms of some of the initiatives when it comes to structural reform, we are saying that we will be investing in businesses located in the special economic zones and the industrial development zones, as well as the industrial parks. And a minimum of 20% of what we'll be doing will go towards businesses located in SEZs, ITZs, and the industrial parks. When it comes to impairment, so in this financial year, the CFO will talk briefly on this. We introduce, in fact, the accounting authorities introduce new accounting standards that are applicable to the NEF, which is called GRAP 104, which was a shift in terms of how we've actually been measuring how we are doing. But maybe, Chair, with your permission, I will actually allow the CFO to touch on those KPIs that talk to internal efficiency as well as the capable state, and then we'll touch on the financial sustainability.
Thank you, Chair and honorable members. So I'll start with the impairment. So we know that with the introduction of the new GRAP 104, which is forward-looking, it means now the impairment has to be accelerated. It does not necessarily mean that our loan book has deteriorated, but it's just a new accounting standard, which is the replica of IFRS 9. What it means is that we don't have to wait for the loss to occur. We need to project and incur the losses accordingly, to a point where even some of the commitments that were not yet dispersed, we also need to consider the impairment provision for that. Because of the inverse relationship between the impairment and the collection rate, so our collection rate, it is sitting at, the target is sitting at 75%. And the number of days taken, we looked at between commitment and disbursement. It's at 40 days as we increase our own efficiency, productivity systems. We're looking into reducing that number going forward. But the consideration is that as a DFI, we fund some of the transitions that are not ready. So it means if we can become too stringent, it means we will not be able to consider some of the transitions that are not ready, i.e. Statutory compliance like zoning, EIE, and so forth and so forth. So in that timeline, we also factor into account that there could be some transitions that are potential commercially viable, but they are not ready from the statutory compliance point of view. And then suppliers, we have been paying suppliers on time. In fact, it's also one of my mandates to make sure that we are support the external needs by paying them timely. So we're targeting 100% payment of the invoice, valid invoice from receipts. And then application process within the standardized digital workflow. We're looking at 40% in year one, ramping up over the period. And advertisement of the subcommittee members, we're looking at 100%, meaning that the adverts will be publicized for the board subcommittee members. So those are the KPIs that were interrogated over that we intend to implement over the next 3 years. And then quickly, I will move to the financial sustainability and capital strategy. As a DFI Schedule 380, our role is to make sure that we balance the two twin pillars, which is the developmental effectiveness and the financial sustainability. So this slide, we're trying to demonstrate how much we've recovered because there could be a perception that we're not recovering. So far we've deployed 11.5 billion. Out of that 11.5 billion, 8.4 billion has been repaid. And we're also looking with a net loan balance of 2.2 after impairment. So if you combine what we have collected so far, what we are yet to collect after we've taken into account the impairment, you can see that it matches with what we have dispersed. And in what we have dispersed, there is a grant portion that is not recoverable. Now, looking at the NEV, what we have received as NEF, as an injection from Fiscus, it's 2.4, but we're looking at an NEV of 5 billion. What it means is that we have doubled from the NEV that from the amount that we allocated. It means if government was to add 10 billion into our equity as an equity injection, you're likely going to get 20 billion. Hence, I spoke about balancing the two pillars, which is the financial sustainability and developmental effectiveness. So over the MTF period, we'll be injecting around 5.25 billion into the economy, as much as there is no any amount that is been received through appropriation, which we were supposed to receive in terms of Section 18 of the National Economic Effect. Thank you.
Chairperson, that's the end of our presentation. Thank you very much for the opportunity.
Thank you. Honourable Messina has asked me to step in as the chair shortly for a short period while he takes another meeting. Could we move on to the ECIC before we take questions, please?
Honourable Chair, honourable members, my name is Willem van der Spek from the DTIC, but I'm also the shareholder representative on the ECIC board. The ECIC, as a provider of commercial and political risk insurance remains a key enabler of South Africa's export ambitions. The ECIC's corporate plan is aligned with the DTI's strategic priorities of industrialization, transformation, and building a capable state. These efforts are vital to ensuring that public policy delivers inclusive growth and meaningful economic impact for all South Africans. The DTI is committed to expanding South Africa's export footprint through targeted export measures, trade missions, specialized exhibitions, and export development initiatives. Our goal is to grow the export value to 3 trillion rand by 2029-30, which is an essential pillar of the NTDP and of our broader strategy to achieve 3% GDP growth. In support of this, the ECIC is at the forefront of efforts to establish a fully operational Export-Import Bank of South Africa by 2028.
Sorry, Mr. Mendes, sorry to interrupt you, but the slides don't seem to be moving. Is somebody looking after the slides?
They were presenting.
Okay, so you got that. Okay, fine, no problem. Thank you.
So in support of this, the ECIC is at the forefront of efforts to establish a fully operational Export-Import Bank of South Africa by 2028. It played a pivotal role in developing the business case that led to Parliament's approval of sovereign shareholding in the FX Bank. And this strategic move with regards to the Export-Import Bank will expand access to affordable financing for South African exporters. The establishment of an FX Bank will address the liquidity gap in export-related financing, enabling more manufacturers and exporters, particularly SMEs and black-owned companies, to participate in global trade. The future exhibition will offer, Exim Bank will offer integrated financing with the ECI's traditional insurance solutions that enhance the competitiveness of South African exporters internationally. Importantly, the Exim Bank will also serve as a counter-cyclical role, supporting exporters during periods of economic stress. The ECIC and the Exim Bank have already demonstrated the power of partnership through the $1 billion South Africa Trade Investment Promotion Program, SATIC. Discussions are also underway to implement SATIC 2.5, with the Exim Bank providing further funding to support trade in the rest of Africa. To grow the underwriting book and expand its support to companies, the ECIC is engaging financial institutions to discuss the establishment of umbrella facilities with the various South African banks. The proposed framework will establish with defined products, sectors, segments, tenors, and qualifying products and services of support. Once the framework is agreed, the ECIC performs due diligence with banks' assessment criteria, client onboarding systems, credit risk management processes, as well as agree on facility limits and reporting requirements. An example of this is a $100 million facility agreement with ABSA, which was approved during the last quarter to service South African exporters, especially SMEs, black-owned, as well as women and youth-led businesses who require working capital facilities and bond products as a solution for their export contracts. This is the first facility agreement within the short-term insurance unit, with Nedbank and Credit Guarantee Insurance Corporation also currently being pursued. To continue growing the short-term insurance business as part of its expanded mandate, the ECIC is targeting the new products related to factoring and discounting in the 2026-27 financial year. The ECIC signed a cooperation agreement with the Algerian Credit Insurance and Guarantee of Export Company, CAGEX, in January 2026. The main purpose of the agreement is to develop cooperation in the areas of export credit insurance, debt collection, commercial information services, and business development with companies from both countries. The ECIC also signed an MOU in March 2026, establishing an African ECA forum, which includes the CAGEX, as well as the Tunisian Company for Foreign Trade Insurance and the Senegalese National Credit Insurance Company, SONET. The MOU establishes a framework for multilateral cooperation between the parties to promote and safeguard inter-Africa trade, while further supporting bilateral trade between the respective countries. It pursues objectives of strengthening Africa economic integration, mitigate commercial and political risks, support African exporting enterprises, and develop innovative credit solutions. This cooperation framework should also enable parties to promote, secure, and enhance inter-Africa trade and to strengthen their bilateral and multilateral economic relations in a spirit of partnership and sustainable development. The ECI is further specifically targeting MOU with the China Export Credit Insurance Corporation engagements for completion of targeting the 2026-27 financial year. There's also an interest to collaborate with Sinosure to assist ECIC in the development and implementation of its insurance mandate management system. Regarding the implementation of the next MOU with Japan, ECI has received a database of 62 Japanese companies operating in South Africa, representing a significant market opportunity given these firms' existing alignment with the NEXI framework of Japan. Engagements have commenced with Japanese key manufacturers, trading houses, with further outreach planned to major OEMs. At the backdrop of this, Chair, honourable members, the APP and overall strategic plan priorities mirror national efforts to advance economic reconstruction, industrialization, and sustainable development. They also reflect a deep commitment to ensure South African businesses are equipped not only to manage risk, but to seize opportunities in an interconnected global environment. The ECIC APP is underpinned by key pillars. The first one is export growth, with a target of 1.8 billion in gross written premiums being identified. The second area is digital transformation, with the use of AI and data-driven underwriting as priorities. And thirdly is a coordinated stakeholder management, which looks at engagement with banks to combine public capital with private funding to unlock exports. I will now hand over to the team of executives, which will go through the detailed presentation on the APP. And I'd like to welcome, we have the ACO, Mr. Gilbert Mapula. We have the CFO, Ms. Nodetandru Makatazo. And then we also the head of human resources, Ms. Mapula Madansela. The chair, I think, I'm not sure if she's online as well, but we also have an apology that she's not in person. She's currently hosting the Secretary General of the AFCFTA to explore deepening regional integration and identify opportunities for the ECIC and to leverage those for the export growth with it.
I am online.
I'm told that she is on the program, on the platform. So
thank you. So I'll just hand over to her to also give some introductory remarks, Chair. Thank you so much.
Okay, Chair, Madam, you're welcome to join us online.
Thank you very much, Chair. Honourable Chair and members, we appreciate the opportunity to present our APP. At the outset, let me state that our board at ECIC is very vigilant about equal measures supporting and holding our executives to account, and to ensure that we are ambitious about our...
We can't hear you, Chair. We're just trying to fix the systems.
Chair, can you hear us?
I can hear everyone very clearly.
Not coming through the...
It's not off, the sound's on.
Just not coming through the...
That's not what I do. I just connected, but I don't know what's on.
You can continue.
Sorry, we can't hear you and we don't have the technicians here, so I'm afraid we're going to have to pass on this one and hand over to the acting CEO.
Fine.
Sorry about that, Chair.
That's no problem.
Good morning, Chairperson, and good morning, colleagues from NEF, as well as the volunteer. Obviously, very respect, the circles of our mandate. There's also great attention in terms of our APPs, but I'll be taking through the presentation without my colleagues, so we'll be interchanging. So I'll cover the first priority, just focusing on our mandate. What is it that we do as ECIC? Obviously, we've been around, for the last 25 years, and it has been a tremendous journey, from where we started to where we are today. What is our vision? We want to be a world-class export insurer in Pacific South Africa for the trade and for investment globally. Our mission is to provide insurance solutions in support of South African goods and services by applying best practice for writing as well as risk management. And then our core mandate, which we derive from the Extra Trade and Foreign Investment Insurance Act of 1978, we facilitate export trade, which includes capital goods and consumables, and cross-border investment that are made by certain companies in the rest of the world. We've got two main line of businesses under a mandate, which is the medium to long-term insurance business. This will provide export credit loans that are advanced to corporate buyers to buy goods and services from secondary exporters. And again, they will also underwrite the mainly shareholder loans and have equity made by supported companies to follow entity. Then the other line of business, our short-term insurance business. This is the area we were moving in. Many ECAs are participating a lot in short-term insurance business. Not that they've forgotten the medium to long term, it's because the medium to long term does take a long time. These are your project finance transactions that take a long time to put together and to execute. So the short term will give us a lot of leverage. We'll be able to make a huge impact. We'll be able to support SMEs as well as black industrialists at large. And here we provide short-term insurance products such as working capital insurance, trade credit insurance, performance bonds, and advanced payments bond insurance. Those are the type of products that we support under the short-term insurance business. And they allow us to support the DTSE's master plans, as well as, to depend, inclusive economy. Then in terms of our SWOT analysis, we look at, how have we moved over
Recording stopped.
heads of ECA summit. And then again, one of the things that we want to do in terms of managing our portfolio is to reduce exposure, through reinsurance and guarantees. We are already having some arrangements in place with the Prison Bank and Lexi. Yes, we have a concluded reinsurance sharing agreement where we could share risk with them. We can be the primary underwriter of the transaction. Then on the back of the agreement, we can offer that exposure to them, which gives us more capacity to underwrite. Then the other opportunity that we see is supporting green economy. The battery value chains, beneficiation of critical minerals is very key. And then some of the areas where we probably could develop, the industry is in solar panels. I know we do not have capacity to do that. Most of the technology, it comes from China. So it's something that we are looking at. Can we contribute, towards the development of that sector? It's got a very big market. The industry is about 46 billion on an annual basis. And then again here, we see opportunity in supporting SMEs and building an inclusive economy. Then in terms of the threats, obviously there's stiff competition on the continent and elsewhere. Most of the insurers, they are looking for opportunities. The ECA-backed finance facility has become the preferred mode of financing infrastructure, especially on the continent. So we do compete with many European ECAs. Then certain debt distress, of African countries. We know we went through tough times in the last 3 years with the Ghana sovereign debt. Some of the entities suffered losses through the Zambian debt restructure. And likely will not involved in that one. But there are also other new countries that are being cited by the OECD, that have suffered, due to the high prices in oil, that are likely to default. So we need to watch out for those. Then the biggest, risk that we face is climate change, climate risk. I think we're seeing how the floods are devastating, some of the areas, the vulnerability that we've seen, especially with the province like KZN. And Mozambique, has also been experiencing El Niños in the previous years with devastating, consequences. Those are things that we definitely need to look at. We need to look for. When we finance projects, we need to make sure there are mitigations that are put in place. And then cyber risk remain the biggest risk. We've seen some of the companies locally that have suffered from that. So we also need to be, to raise our guard to make sure that we protect, the company and its data. Then balance sheet erosion due to exchange rate volatility. So here, as I've said, we do suffer a lot of tax leakages. And some of it is due to translated numbers, from US dollar to rand. We do have a US dollar as our functional currency, and that is due to the portfolio that we manage, which is heavily dollarized. And something that we definitely need to think about and look for a permanent solution, going forward. And then the negative impact of the Ghana claims. Yes, a lot of financiers, if you talk about Ghana opportunities, they kind of think twice whether do we need to go to Ghana or not. And especially given the deal that we reached, at the Paris Club, which does not favor us. For the first time, we saw a paradigm shift where Ghana negotiated a grace period of 15 years and 2 years of repayment. So we now have to wait for 17 years for our money. And by that time, we'll be expecting Ghana to be defaulting again. So that is the SWOT analysis. Then on the next slide, this slide, it summarizes our intention in terms of where do we want to drive our business, where do we want to play, what are the sectors that we want to prioritize, what are the products that we want to introduce, as well as, the establishment of the Exim Bank. So here in terms of the markets, we want to diversify our portfolio, and the SADC region still remains a primary market that we need to focus on. East Africa corridor, we haven't been able to do business there, including North Africa. So those are some of the areas that we need to explore. And then we also look at select Middle East, countries that we can support. Very interestingly, the Middle East has become the second largest buyer of South African aerospace and defense products, and the first one is Europe. So these are some of the markets that we're looking at. We are engaging with some of the big industrial players, state-owned entities in this regard. And then in terms of the sectors, energy and renewables, it's one of those sectors that we're looking at, transport and logistics. As I've said, aerospace and defense is going to be our focus area because we want to assist some of the state-owned companies, to restore their former glory and to reindustrialize the country and to take advantage of the demand, of aerospace and defense, equipment. And we are hosting the association on the 20th of May to discuss what challenges do they have, and how can we assist them. Then in terms of decarbonization, renewables, underwriting, that's what we'll be focusing on. Climate resilience, infrastructure and technologies, it will also be another area of focus. And then again, in terms of digitization, as I've said, there's a lot of technology exchange in aerospace and defense. And I think, as I've said, this is one of the areas where we will be focusing on. Then in terms of our product innovation, we are looking to introduce discounting and factoring as a new product. And I think this will give us a very good leverage in terms of supporting SMEs as well as black industrialists and new entrants. Then we'll also be pursuing master participation, facilities. And already there are engagements that are ongoing with commercial banks, as well as with the private insurer, Credit Guarantee Insurance Corporation on a master sharing basis. Then we'll also focus on our existing products, how we can improve them to be competitive, refresh them where we need to. And then again, the focus, and again here, the focus will be on buyer's credit, corporate and investment insurance. And then in terms of strategic partnerships, we do have a very strong relationship with the Afro-Exim Bank, which was demonstrated by a SATIP one that we had. That was to the value of $1 billion, which was expanded, on some of the projects, on the continent, such as Zim Borders, also Mozambique is benefiting. We're also using the guarantee portion, to guarantee our facility. Then we're also going to look at syndications, reinsurance with other ECAs, to de-risk our portfolio. I think the target that we have is that at least 25% of portfolio needs to have the reinsurance of guarantee. Then in terms of establishing the South African Exim Bank, a lot of effort has gone into this. We definitely feel that there is an opportunity for the bank to exist and to make a very big difference. We need to change the landscape of our financing, export financing ecosystem. And it has been indicated that where you find an Exim Bank, in existence, together with the ECA, they do make a lot of impact in terms of supporting, good initiatives, supporting exports, building new industries, and more importantly, building export trade within the country and assisting the SMEs. So in our case, I think one of the telling statistics is that when you look at our export, landscape, 5% of exporters contribute to 95% of exports. That's not a good picture because when it dissects, the 5%, the 2 to 500 companies, you realize that our exports are concentrated in automobiles, agriculture, as well as minerals. So there's a lot of scope, to support other industries, and to be competitive all around. So the Exim Bank will be a very key feature in this regard. So I'm not going to go through the APPs. I'll hand over to Ms. Madonzela to take you through our consolidated slide that summarizes our APP. Obviously, the most important thing to say is that we've had a lot of discussion with the minister. He was very clear in terms of what he wants. He wants impact, job creation, re-industrialization, and industrialization of South Africa. And I think this is what our APPs are to do. Mapula?
Thank you, ACO. Good morning to the chair and the members of the committee. In this slide, we're sharing with the committee the 5 strategic goals that have been set by the corporation. We firstly look at our first strategic goal of export growth, which is aligned to the DCIC strategic priority area of strategic market access and expanding exports into the global market, as well as unlocking access to capital and finance outside of the state. Within this strategic goal of export growth, we have 3 focus areas, with the first one being underwriting activities. And under this focus area, we have 5 KPIs. And those KPIs, the first 2 relate to the corporation achieving value of approved transactions to the value of 530 million US dollars in our medium to long-term insurance business, as well as us approving value of approved transactions under the short-term business to the value of 180 million US dollars. I will not go into detail into the assumptions and the considerations that have been made to set these targets, as our CEO will take us in detail. Our third KPI is that of the corporation ensuring that it achieves disbursements both in our medium to long-term insurance business as well as our short-term insurance business. And similarly, we have targets that have been set for the MLT portfolio. The target that has been set is that of 355 million US dollars. And for our STI portfolio, we've set a target of 40 million US dollars. We expect that also as we underwrite transactions, we will achieve a gross written premium of 1.8 billion in both our insurance businesses. Our second focus area in this strategic goal is that of strategic partnerships. As the ACO has already touched on that, we want to focus or implement the SATIP 2.0 program, which will result in us having guarantees with the Afri-Exim Bank and syndicating, and also having funding for some of the SMMEs. We also plan under this focus area to pursue reinsurance agreements with our counterparts, being Sinosure, as well as Nexi and other ECAs. This will ensure that we de-risk our portfolio and we co-insure with some of them. As the ACO has already indicated, looking at our pipeline and the transactions we're planning to work on, we plan to at least ensure that we have syndication of at least 25% of our identified large transactions. And lastly, under this strategic goal, we would be focusing on the Exim Bank, ensuring that we set up the project management office, and also ensuring that we set up a steering committee that would include the Afri-Exim Bank, DTIC, ECIC, and other external advisors. And we aim to ensure that by March 2027, we would have the ECIC legislation and enabling SA Exim legislation approved by Parliament. In our second strategic goal of economic transformation, which is aligned to the DTIC focus area of workforce readiness, we focus on achieving 4 KPIs. The first KPI is that of us maintaining the level 1 BBB score that we've been achieving as a corporation. Our second KPI is that of ensuring that 20 SMEs participate in the transactions that are underwritten by ECIC. And the third KPI relates to us ensuring that we facilitate jobs, 10,000 job opportunities, and ensure that we create those or sustain those within the transactions that we underwrite. Lastly, we want to ensure that we contribute 3% of our net profit after tax from the previous year to either the transformation fund or our internal enterprise and supplier development program. If we do achieve this KPIs, we expect that over the 5-year period, we would be able to ensure that the 70,000 jobs that are created as our projects reach the drawdown phase. Our third strategic goal is that of achieving operational efficiency, and this strategic goal aligns with the DTIC focus area of ensuring that we reduce the red tape. And in this strategic goal, we have 2 KPIs. Firstly, we want to automate our key business processes. As the CEO has already indicated that we are partnering with one of the ECAs to ensure that we implement systems. We want to have a customer relationship management system and an insurance management system that will be utilized, ensuring that we can turn around our transactions expeditiously. And then in terms of our 4th strategic goal, which is financial sustainability, which is also linked to building a capable state and ethical state, we have set ourselves 4 KPIs. The first one being of ensuring that we achieve a combined ratio, which is a ratio we chose as a financial sustainability measure. We also look at outperforming our investment portfolio composite benchmark by at least 1%, and also achieve the ECR above 125% and the solvency capital ratio above 130%. And we continue to aim to achieve a clean audit as the corporation. Lastly, under the culture transformation goal, we want to ensure that we reduce entropy within the corporation and achieve a culture entropy of score of below 30%, which would be a reduction from the rate that was previously achieved. And lastly, we also want to achieve succession coverage for key position of at least 55%, which would ensure that the corporation has built some bench strength in its executive roles. Thank you. I will hand over to the CFO.
Thank you, Chair, honorable members, colleagues from the DTIC and the NEF. So in terms of this slide, I will be going into detail as to what targets are we aiming to achieve throughout the strategic session, which starts in 2027 up until 2031, because the targets that Mapula was talking about were relating specifically to the 2027 financial year. So the first KPI, as Mapula has mentioned, deals with the value of a deal that we are approving. So for the short term, for the medium to long term business, we are aiming to approve $2.9 billion worth of projects throughout the 5 years. And then when we translate that to US dollars, to rands using an exchange rate of 17 rand, then it translates to approximately 50 billion rand. And you will note that most of the targets that we have set here are in US dollar, and that is mainly because the cover that we provide is in US dollar because of the exports. And then in terms of our short-term business, over the 5 years, because this is a fairly new line of business, we are targeting to achieve 1.4 billion US dollars over the 5 years. And then when we convert this to rand using 17 rand, which is an exchange rate between our US dollar and rand, it translates to roughly 24 billion rands. And one of our requirements that the projects must meet for them to qualify for our cover is that they must show that they will be achieving a South African content of around 70%. However, in an instance where the project will also be procuring from other African countries, then we reduce that requirement to 50%, with the 20% coming from the African countries. So this then means that in terms of the pipeline that we are generating for exports, it is between 25 billion and 35 billion for the medium to long term business, and then in terms of our short term business, it is between 12 billion rand to 17 billion rand over the 5 years. And then the next stage, it is where we now check the actual utilization of our cover that we are providing, where we are tracking the value of disbursement, because on the first set of targets we were approving, but now we are checking the actual utilization, because that is where we will now realize the exports that we are supporting. So in terms of our medium to long term business, over the 5 years, we are expecting disbursements to the value of 1.7 billion rand, and translated with rand, it's approximately 28 billion rand. And then in terms of our short term business,
exigency, Chair.
47 million US dollars. And then when converted to rand, it translates.
Chair, I'm not sure if you can hear us. That's a point of exigency.
It translates to 4.2 billion rand. So as I've indicated, because we do have a requirement for SA content, then the actual exports that we are aiming to achieve.
Hello, Chair, is there anyone? Can you hear us?
To pay for the goods that they would have utilized for the medium to long term business for the 5 years is around.
I'm not sure how we can try and reach them.
I think we can actually send a message, maybe send a message by WhatsApp, because we can't hear the presentations. It's very soft.
Yes. Yes. All right, let me try and call it.
Okay.
Sectors which might contribute to us not achieving these targets, and we have also indicated what those factors are and how we aim to mitigate those risks. For example, on the medium to long term business, this is where, for example, there would be instances where we provide cover to sovereign-backed projects, and then we would find that some of the countries they are facing financial constraints because they are heavily indebted. And we have also noted that with the other ECA that are coming from OECD countries, they usually rate Africa as a high risk continent. So on our side, we do perform country risk assessments internally, where we take into account our experience and assign relevant levels of risk. And then the other item, that the other mitigants that we also put in place is in an event where we feel that a particular country is highly indebted, instead of providing cover to sovereign-backed deals, we will then consider to provide cover for projects that project finance. And then the other factor that also contributes, as the ACO had already mentioned, is if, for example, some projects might go into force majeure, and we also mentioned the Moss LNG, which took long to close. And then the other contributor is the credit downgrade of the country, because now when in an event where the country is downgraded, then it means that the cost of funding becomes expensive, and then our banks will struggle to compete with international banks when they are providing loans to foreign. And then in terms of our short-term business, the factors that we are identifying there is a possible contributors to us not achieving these targets relate to the slow uptake of the master facilities by the banks and the BFI. So as the ACO had already mentioned, for the short-term business, it's a fairly new business that we have just went into. So we are, for us to have a good uptake in terms of this product line, there are engagements with the banks, and we are trying to broaden our base so that in an event where there are some banks that are slow in taking up those facilities, then those will be replaced with other banks. And then as Mapule has also mentioned, is that in terms of our short-term business, because currently it is a manual process, and we do note that the repayment terms for those projects are usually short. So it is important that we turn around our approval process quickly, so the automation will assist us with approving some of the decision making automatically. Then as we achieve these targets, then it will assist us with underwriting premiums to the value of 4.9 billion rand over the 5 years. And also to note that this is the premium that we will underwrite as the project becomes effective. So it creates a pipeline as to how we will be earning the premiums in the future. So it will assist with ensuring financial sustainability of the organization. And then the risk in achieving this will relate to the slow or the delays in financial growth, because we can only earn these premiums once the deal reaches financial close and they have grown. So for us to address this risk, we focus on how we structure our transactions, where, for example, there would be conditions that are precedent to the project becoming effective. So we make sure that the conditions that we put there are conditions that are reasonable and achievable by the project. So in an effort of protecting the balance sheet of the organization, also noting that projects that we underwrite are of high quantums, and they also introduce concentration in terms of our portfolio. As the ACO and people have mentioned, we do target that we will be reinsuring 25% of the project that we consider to be of big quantums, and that target has been set throughout the organization. And then what will prevent us from achieving this will be the slow uptake from the lack of appetite from our reinsurers, because some of the reinsurers there are private reinsurers from the world market, but then we are broadening our partners, as the ACO has already mentioned, the type of arrangement that we have already started discussion with. With the last target relating to this objective being the establishment of the Exim Bank, with the legislation targeted for the current financial year and the actual launch targeted in the 2028 financial year. So the approval of that of the legislation will assist in achieving this target. And the ACO has already indicated the effort, the activities.
Recording in progress.
Already underway to achieving this target. And then in this slide, we provide additional information which shows how we got to those targets that I was discussing in the previous financial year. So currently we have a pipeline of about $4 billion US dollars, and then we are expecting that pipeline to be approved in different years, and we are indicating those years. But we do note that our pipeline is dynamic because there will be projects that come in and projects that go out of the pipeline. And so as a result, we assign probabilities to that pipeline where, for example, we are apply probability of between 10% and 20% for the projects where we feel that they have a low probability. And then for the medium projects, we assign a probability of 40%, and for the high probability projects, we assign a probability of 60%. And we also indicate the projects that we are aiming to reinsure in terms of that 25% target that we have set. So at the moment, we have reinsured 218 million, and this is relating US dollar, and this is relating to the North LNG. However, that project was put on force majeure, and then when it becomes effective again, then that's when this reinsurance will kick in. So in terms of the target that we have set for us to achieve that 25%, it means that the total reinsure that we are aiming to achieve is 606 million. So meaning that we still have to achieve 280. And then we also indicate the sectors that are represented by this pipeline. And these sectors, we aim to align them to the sectors that are targeted by ECIC. On this slide, it is a additional detail or a granular detail of the slide that I just went into, where it's showing the project. And then similarly, on the short-term business, we are also indicating the projects that we are targeting, and you will note that in terms of the facilities, those are the ones that we will be assisting with the uptake. And as the ISO had mentioned, we have also had discussions with Daniel and ANSCOM to assist with the cover that they need. And then on this slide, we show the detail of our written premiums, and then we will also indicate this is also, we also apply a probability, and we also do stress scenarios, noting that our pipeline is dynamic. So hence we apply these probabilities. For our base case scenario, we apply a probability of 60%, and then in an event which translates to a target of 1.8 billion in the 2027 financial year, and then we also indicate what the target is for the remaining years. And then you will note that even on that graph, that is on the bottom right, it also shows the fluctuation in terms of our historical performance, mainly because this is dependent on the projects that would have been effective in that particular year, because we account for written premiums upfront in terms of this target. And then on this slide, we show the run of our existing book, where in an event where we do not underwrite any business, it shows that with the current exposures, those, because they are repaying their loans, it means that they are expecting by the end of 2031, the exposure would have reduced to 70 million, which is the blue line. However, when you take into account the projects that are in pipeline, then we foresee our exposure increasing to 1.2 billion. And then on this slide, it provides additional information of the strategic partnerships that we are targeting, but the CEO has already discussed this.
Thanks, CFO. When we look at the strategic goal of economic transformation, we go into detail into the KPIs that have been set there. The first KPI is that of the corporation maintaining the level 1 BBBE score. We have been achieving the level 1 BBBE score over the years, and that has remained our baseline, and we aim to ensure that we continue to achieve that. Second KPI is that of ensuring that we have SMMEs that are participating in transactions underwritten by ECIC. When we look, we didn't have baseline data as we were setting these targets, but noting that the country has to do more in increasing the growth of SMMEs. Similarly, we've set a target of ensuring that over the 5-year period, would have a minimum of 150 SMMEs participating in transactions that are underwritten by ECIC, starting in the current financial year with us having 20 SMMEs participating in the projects that we would underwrite. And we also aim to ensure that we facilitate job opportunities. When we looked at our baseline, we noted that we were doing very poorly, and we only had 168 job opportunities that were created. And going forward, we want to ensure that over the 5-year period, we have 115,000 job opportunities facilitated, starting with this current financial year, with us targeting 10,000 job opportunities facilitated. Also, in terms of, or in this slide, we just share additional data in terms of how we're doing in terms of our BBBE score and number of SMMEs. It would be noted that we have been maintaining the BBBE level 1, and we're doing well in that regard. But we also note that there's certain areas in respect of the BBBE elements that we need to improve, such as in the enterprise and supplier development. In terms of the number of SMMEs that participate in transactions, our goal is to promote increased participation of those. We note that SA manufacturing has been largely concentrated in Gauteng, KZN, Eastern Cape and Western Cape, but ECIC plans to have a reach-out program that all provinces will have SMMEs that participate in the transactions that we underwrite. I think this slide also is just a granular version of the number of jobs that we've already spoken about, but what it tells us is that we have an economic impact assessment model that we use that tracks the number of job opportunities as the transactions draw down. I will then hand over to the ACEO.
So in terms of operational efficiency, yes, we are targeted to automate our processes, and the first target will be CRM, which is a customer relation management system, which is a customer management. and at least achieving 70% of utilization of the system. Obviously, the big focus is on the short-term insurance system, which is linked to our insurance management system. As I've said, yeah, you cannot find this system off the shelf. Most of the ECA, they've built a system in-house. They've got a bespoke system. So in our case, we have engaged with Kuke, the Polish ECA, to see what solution they have. And we're happy with the basic functionalities that are there. And that system is one that we're looking at, to build. However, we'll also be linking up with SunAssure because we do believe that their system is the best in terms of efficiency. Obviously, both systems are more or less the same. They're with the same functional parameters, but I think the added advantage of this Chinese one is the digital platforms that they're using it on. As I've said, you can apply for cover on the phone, and within an hour you get the cover in place. And this works well for repeat business, where you have already built database, with exporters that utilizing the coverage. So we'll make sure that we have that system by the end of the MTF period. Then in terms of clean audit, we want to make sure that we continue to get clean audit. Obviously, we've gone past the IFRS 17 challenges now, so we know how to account for expenses and salvages. So we're not expecting any issues there. Then the next slide. Financial sustainability.
Okay.
Yeah.
Okay, thank you. So the ECIC does not receive transfers from the DTIC to meet our operational needs. However, the transfers that we get is to pay the IMU claims, and those are paid to the financial institutions. So as the board and the management of ECIC, we try to run ECIC as a self-sustaining organization to avoid the need for us to requesting government recapitalization, which will put additional strain on the fiscus of the government. So we do aim that for the projects, for the underwriting business, it must be self-sustainable, where the profit that we generate from that business must be sufficient to cover the operating expenses and any claims that might arise. And then for that, we are aiming to achieve a combined ratio of not more than 80%, because this ratio, we take into account our operating expenses and our claims, and then we calculate that as a ratio of our end premiums. And then in terms of the risks associated with this, it will be in an event where we pay high claims, or we have over expenditure, or there's low revenue coming from a lack of conversion of our pipeline, or there is refinancing or early partial prepayment from the projects that we underwrite. So meaning that there will not be sufficient revenue to generate. And as part of the mitigants that we have put in place is to maintain our operating expenses, where we are trying to ensure that our revenue covers our operating expenses by a minimum of 2 times. And then on the revenue side, the target there is to convert our pipeline early so that we can earn that premium in early. And as we do that, we would be receiving premiums, and then we will invest those premiums to earn high returns, so that in an event where our underwriting results are not able to cover all our claims, then we will be able to tap into the resources that we would have generated in the previous years to avoid any recapitalization. So the target there, it is to outperform the benchmark by 1%. So in terms of our investment, we have split those into tranches where each tranche has specific requirements that it would meet. And then based on the tranche, for example, we would have a working tranche, which is more for our operational expenses. And then we would have an excess tranche, which is to generate high returns. And we would invest in in like, for example, equities. And then for all those tranches, we will assign benchmarks, and then fund managers will be allocated mandates where they will be tracking their benchmarks. And then the risk there is in an event where, for example, we are overweight on poor performing managers, or there is inefficient cash flow management, or the fund managers that we have selected are misaligned to the benchmarks that we have set. So what we, to address this risk, we do ongoing assessments where we assess the performance of the fund managers against the targets that they have set and how they are performing in terms of the level of risk that they are taking or are exposing the mandate. And then we do those timeously, where we would also take particular attention to poor performing fund managers. And then ECIC, we are regulated by the FSCA and the PA. And as the ACO has mentioned, in terms of the PA, there is a minimum threshold that has been set, and then which is at 100%, and then our target there is to achieve 130% over the strategic session. And then this target has been set slightly above what the regulator requires, noting that there are some fluctuations in terms of our insurance liabilities. So this is to make sure that we have sufficient capital to meet the requirements stemming from our policies. And then, as the ACO had also mentioned, that we also do an internal view of this capital requirement, noting that the ECIC's business is not the same as other insurers, where, for example, our business is more US dollar, and then the other insurance companies are more rands. So there are some adjustments that we do in terms of the level of cover that we calculate. So in terms of our internal view, the target there is to achieve a ratio above 125%. And then this is largely affected by claims that we incur or salvages that we receive. So of importance here, it is to ensure that we adhere to the underwriting criteria and limits that have been put in place to avoid any breaches in terms of this target, and use reinsurers where required. And then on this slide, we indicate how we are calculated this cost to combined ratio, and then we've done a comparison with the other ECAs. And then on the next slide, we show the triggers that. The next slide, Mapula. On this slide, we show the levers that are available for the organization to ensure investment performance, where, for example, the manager selection plays a huge role in terms of us achieving the outperformance that we are targeting. And then on the next slide, this is a slide that shows how we are calculating the benchmarks that we have assigned to the different managers, and also the target that we have set where we considered our performance over 2016 to 2025 and calculated the average outperformance for that period, and that was used to set the target for the strategic period.
Just to round up our presentation. So as I've said on the cost entropy, we are targeting a score of between 30 and 35. And hopefully we will achieve this. But what I want to conclude by today is that, as ECIC, we're trying our best to run the business in a very financially sustainable manner. But at the same time, we need to achieve our mandate. We need to support exports. We need to create jobs. And I think the strategic plan and the APP that have been outlined here, they are precisely talking to those points. And hence, we are now increasing our footprint in terms of supporting the STI, the different initiatives that we have put in place, through master sharing and facilities are geared to that. In fact, some of the details also looks at how we can assist, and new entrants, into the export trade business. In some cases, we do have waivers for certain things that cannot be met to assist those businesses. So I believe that the plan represents a very good chance for ECIC to really try and turn the corner, to really try and make a dent, into a high unemployment rate. I'll pause on that note.
Thank you, Honorable Chair, honorable members. I think we've gone through some of the detail of the APP, and from a departmental perspective and a ministry perspective, a lot of the targets as well as the impact into the economy was worked out in detail and also workshopped with the ECIC to make sure that its contribution does make an impact on the economy. Additionally, as well, from a board perspective, the APP and the scorecard, corporate scorecard, which is part of the documentation, will be used to drive the strategic execution and implementation of the entity's targets, but also in its broad mandate with it. So I think what is very important is that the board has taken a lot of effort, not only to just look at the guidance received from Ministry and DTIC to make sure that the targets are impactful, but it will be a key tool to use that there is practical implementation on the ground, that management does make sure that it delivers on what the APP has promised at the end of the day. I'm not sure if we have managed to secure the chairs being able to contribute, but if possible, then I think she would also like to do maybe some closing remarks from that side. From our side, I think the team will be responding to questions, but we will also be giving written responses where required on that side. So thank you, Chair members.
We'll try to communicate with the Chair. If we can't, then we'll use the tea break to try and set up the systems. Chairperson, are you available to talk to us?
Yes, thank you, Honourable Chairperson. Can you hear me?
Just going to lower the volume. We can hear you. Yes, please go ahead.
Okay, thank you very much. I think the team demonstrated that our APP is both congruent, consistent, and also very coherent. That's what we were aiming for in our plan. And I think, it is clear that our posture as the board, we have leaned on management to say that we will equal measure provide support with the implementation of the APP with stewardship, oversight, and then we will hold you accountable. So it will be clear that what we are trying to do is to pivot away from just being a risk mitigator, but to also evolve towards being a catalyst for for growth, as Willem and the team has demonstrated, as well as the ACO. So we are saying, and the message that we wanted to leave you with is that we are aiming to reposition the ECIC, and we will do that by anchoring ourselves in geographic leadership, which means one of the things we will do is to leverage the AFC FTA and make sure that instead of the concentration of project finance that we currently are experiencing, we will spread our wings into the rest of the continent. At the same time, make sure that we take advantage of the opportunities that present themselves in the BRICS countries, amongst others. What we are starting to see are Chinese, Netherlands, UK, US export credit agencies starting to work with our funders in the continent. So we cannot sit helplessly by and not intervene. We want to position ourselves as that export credit agency in Africa that has got the deep knowledge of the continent, that understands how to do business. And then those that are eating our lunch will have to compete on an equal footing with us. We also are going to strive for market leadership. By that, I mean that in order for the ECIC to remain relevant, it's important for us to start being inclusive, doing more work with emerging businesses and supporting them. You've heard a lot about that from Mapula and our ACEO. That's why we are enthused about the prospect of establishing an Exim Bank, which will have a lending arm that will, amongst other things, focus on supporting SMMEs. So that is a key strategic objective for us, and we're excited and enthused by that. And then lastly, the business leadership. By that we mean the whole idea of shifting and pivoting towards short-term insurance. About 2 weeks ago, we met with the key commercial banks in South Africa who we partner with in order to crowd in private capital. And we provide the guarantees to them. They are a key stakeholder. They were all saying that they are moving away from project finance. They'll do that still, but where they see opportunity is in the trade finance. So that is why we are also saying we will match them and ensure that we start to do product innovation in the short-term insurance space. So hopefully that high-level flavor of what we are trying to achieve. Thank you for your attention, and thanks to the team. Thank you, Chair.
Thank you, Chairperson, and thank you everybody for your presentations. We're going to take a short break for tea. It's now 21 minutes past. We'll make it at 11:35, so that gives us 15 minutes for our break. Okay? Thank you.
Thank you very much, Chair. And greetings to honorable members, DTIC, NEF led by the CEO, ECIC, board members on the platform, and our supporting staff. Chair, let me start by welcoming both presentations, the very comprehensive presentation by both agencies. In particular, the ECIC. I almost thought they would run out of time there, but fortunately, the NEF was a bit brief, so I think they got some time from that. To ECIC, ACO, please don't leave us behind. We see, I'm not sure if it's the CFO that did not get the memo, but what's with color purple there? Chair, in this platform we are in, we always learn new things, and it's important that we're open to learning. There's so many acronyms, and today I came across an acronym of an ACO, and I'm honestly not quite sure what it stands for. It will be nice to know what it stands for. To my questions, I will start with the NEF. CEO, we emphasized the shift from funding activity to measurable economic outcomes, linking capital directly to jobs participation. What systems are in place to ensure that these outcomes are tracked, verified, and sustained over time? I think that reflected on slide 7. And also, the APP projected, or rather projects, 1.5 billion in disbursements and approximately about 4,200 jobs created in 2026-27. The question will be what methodology underpins these targets, and how will the sustainability and quality of these jobs be assessed? I think that reflected on slide 18. The transformation fund is positioned as a catalytic blended finance instrument to crowd in private capital. How will NEF ensure that this approach does not crowd out private investment or create long-term dependency on state support? Given the focus on the township and rural economies and SME participation in value chain, what mechanisms are in place to ensure that funded enterprises remain viable in areas constrained by infrastructure and market access? And also, CEO, the presentation acknowledges execution risk and challenge of achieving scale and measurable impact. What strengthened governance and accountability measures are in place to ensure delivery against targets? And to ECIC, excuse me. ACO, given your expanding underwriting role in high risks market and the identified portfolio concentration in African sovereign exposure and large claim risks, what concrete what concrete safeguards are in place to ensure that contingent liabilities do not ultimately fall on the fiscus? Number two, with the planned establishment of the South African Export-Import Bank, including a lending arm to complement ECIC's insurance function, how will this initiative avoid duplication with the existing DVIs while remaining financially sustainable? I think that reflected on page 6 on the APP. Number three, while the ECIC commits to supporting SMMEs, the APP targets only 20 SMEs participating in transactions in 2026-27. What measures are in place to meaningfully expand access beyond a narrow group of firms? Number four, the plan highlights reliance on large long-term projects and the lumpy pipeline of approvals. What steps are being taken to diversify revenue streams and stabilize income over time? And the last one, I think the CFO touched on the fund managers. I just wanted to find out how many fund managers are there currently, and of those fund managers, how many are black owned? Thank you very much, Chair.
Honorable Ndluli. Thanks, Chair. I have a few questions directed to the NEF. I'd obviously prepared them before this meeting, but I added some as we were getting the presentation. Just firstly, thank you for both of the presentations. I think they were rather very insightful. Much appreciated. I can see that a lot of effort was put into compiling those. So the first question that I have is with regards to the NEF's position on triple BE. So the NEF states that it is exclusively mandated to facilitate triple BE. How does the NEF ensure that this mandate translates to broad-based economic inclusion rather than concentrated benefits to politically connected elites? The second question is, given South Africa's low growth environment, what evidence does the NEF have that its model actually increases GDP growth and productivity rather than simply redistributing ownership? Now, onto the APP. So the APP claims a shift from funding activity to measurable economic outcomes. What specific causal methodology does the NEF use to attribute job creation directly to its funding? Secondly, on that point, how does the NEF guard against double counting jobs, especially where multiple entities co-fund projects? The other group of questions is with regards to job creation targets. So the NEF targets 4,200 jobs in 2026-2027. What is the average cost per job created based on projected disbursements of 1.5 billion rand? How does this compare to alternative job creation interventions rather? And how does the NEF justify its efficiency? And most crucially, why are there no audited historical job creation figures provided in the APP for the previous years? Now, off to impairments. The portfolio impairment rate is projected at 40%. How does the NEF justify such a high impairment level in terms of fiduciary responsibility? On that point, secondly, what is the write-off rate versus the recovery rate? And how much taxpayer capital has been permanently lost? The third point on that line of questioning is the collective ratio is declining to 70. The collection ratio rather is declining to 75%. What are the underlying causes and what corrective measures are in place? And the last one on that point is the presentation claims that 77% of capital has been recovered. Can the NEF reconcile this with rising impairment levels? Then just the last point on industrial policy, the last group on industrial policy. So nearly 90% of investments are in prioritized sectors. What evidence shows that these sectors are delivering the highest economic returns? And secondly, how does the NEF avoid politically driven sector selection rather than market-based allocation of capital? Thirdly, what is the NEF's strategy to support export-led growth given weak domestic demand? Thanks.
Thank you, Chairperson. And good morning to the honorable members, the two entities present here, the Chairperson and CEOs. Chairperson, my question is as follows to the NEF. What percentage of the budget disbursement goes to business that are 100% owned by youth and women? And then my other question is, what percentage of the NEF's annual budget was actually disbursed to beneficiaries in the last year, financial year, broken down by provinces and sectors? How many direct jobs have the NEF funded business created in the past 3 years? And then I've got 3 questions to the ECIC. How will the plan measure and increase support for Black industrialists, women, youth, owned exports and SMMEs over the 5 years period? What investment in technology are planned to improve turnaround times and client experience? And then my last question, what provision are made for the increased geopolitical risk and potential claim from high-risk markets? Thank you, Chair.
Honorable Chance.
Thanks, Chair. And I just want to compliment my colleagues on their excellent questions. And I'm very much looking forward to the answers to those questions. I do have a few of my own. It's quite convenient for the CEO of the National Empowerment Fund to just cast off the Transformation Fund as Mr. Tower's pet project, which means that he doesn't have to account for it in this meeting, which I find disappointing. Because the Transformation Fund, in terms of its goals and objectives, is significantly bigger than the lending plans for the NEF itself. I mean, we're talking 20 billion rand is the target, compared to 1.5 billion of the NEF. So my first question is there a danger that the Transformation Fund is going to cannibalize the NEF? And I'm talking about also your capacity. I mean, how much of the NEF's capacity has been moved into the Transformation Fund or is being moved into the Transformation Fund? Do we yet have a launch date for the Transformation Fund? I mean, it's been on the cards now it was first announced in a committee meeting in November 2024. It's now 18 months later, and there's still no Transformation Fund. So, notwithstanding your casting it off, CEO, maybe the board member can also give us some input. I'd like to get some information on the readiness of that fund. Then, it's quite curious that in terms of the Black Industrialist Program, there's no historical record of expenditure or funds on that in terms of the numbers that you presented. Why is that? And in terms of outcomes and your shift from funding to outcomes measurement, is there a retrospective? Is there an attempt to do some retrospective analysis? Mr. Ndluli was sort of focusing on that a little bit, but I'd like to just get an answer. Are you able to give us statistics using the measures that you're putting together on performance in the past years, using those same measures? I'd like to get some information on the Spaza Shop Support Program, which is a joint project between yourselves and the DSBD. There's no mention of that in the presentation. And also, I'd like to get an update on the Industrial Parks project that I was interested to see get off the ground, hopefully, with WorkPods, former CoSpace. Could you give us an update on that, please? It is disappointing to see the very low export revenue. And it seems to me that that's something that you and the ECIC should be talking about. And in fact, one of the questions I have later is for the ECIC is the fact that they don't have a dedicated export arm. It would seem to me that this is something that the DTIC at a strategic level needs to look at quite carefully. The concern I have with the impairment rate is how does that translate into sustainability for the organization? And then the interest rates that you're having to charge to recover the loans that are being paid back, and to cover the losses from the impairments. Then finally for the NEF, you're talking about digital workflow. One of the things that the Transformation Fund was or is meant to be implementing is its telemetry system. And is there some connection between that proposed telemetry system and the digital workflow that you're referring to, CEO? Then when it comes to the ECIC, there's a lot of mentioning of the Afreximbank. And in fact, that was also mentioned in the context of the Transformation Fund. And reference was made to guaranteeing of export credit. Now, obviously, that will draw down on the Afreximbank balance sheet, but is there an intent for actual loans to be offered by the Afreximbank directly to beneficiaries? In terms of the fact that you have a 25-year-old organization, it seems strange to me that only now you're implementing a CRM and short-term what is it? Some other term that was used, but basically an IMS, that's right. Insurance management system and a CRM. So why is it taking you 25 years to put together two things which would seem to me to be absolutely core to the organizational efficiency of the ECIC? I also find it strange that you didn't mention artificial intelligence once and the use of AI as an opportunity to improve your effectiveness, because it seems to me that potentially in an organization where risk management is critical, that AI would be playing a part. I'd like to get some input on that, please. You mentioned the need to have advanced government and diplomatic relations. What, if any, are your relationships with DOCO and also the foreign economic representatives that the DCIC is appointing or does have in place already to build those international relationships? Right, in terms of the Exim Bank, how will that be capitalized? And to what extent? What will its capital base be? And when are you expecting the legislation to be brought to the committee so that we can take a look at it? You said that there is a risk that Parliament won't approve it in time. Well, the first thing is let's see the legislation. We can get Parliament to work on it through the committee initially as soon as it is actually tabled. Then this whole thing of cultural entropy is fascinating to me. It's an interesting terminology, cultural entropy, and I don't understand why you have such a high, what you call cultural entropy, which is essentially a measure of dysfunction or disorder in an organization. What is the problem there? And what do you think needs to be done to address that? And I'd like to know, acting CEO, how long have you been the acting CEO? Why don't we have a permanent CEO? I hope the chairperson is still on the line. Perhaps she can answer that question. What is the process for appointing a permanent CEO, and how long is it going to take? Then there's something I can't understand again. The jobs baseline is 168, and then all of a sudden it leaps to 10,000 in 1 year. How is that possible? 115,000 jobs over 5 years sounds very impressive, particularly when we compare that to the number of jobs the NEF is expected to create. Where does that number come from? And could you give us some sort of evidence of the probability of those jobs actually being created? And then again, the baseline ratio of 138% with a target of 8%. Why is there such a high baseline? of 138%. And how are you going to get it down to 80%? Because that's a huge leap or decline, a positive decline. I think that's it for now. Thank you, Chair.
Thank you, Honorable Plein and Honorable Koza on the line.
Thank you.
Thank you very much,
Chair.
Okay.
Thank you, Chair. Chair, let me then just go straight into my questions. I'm glad that we were able to get the glitches that we had earlier out of the way. Chair, to the NES, how will the entity ensure that its funding interventions, including the new transformation fund, meaningfully support Black industrialists, township and rural enterprises, and youth and women-owned businesses, while at the same time improving repayment rates and long-term sustainability of funded enterprises? And then additionally, Chair, what mechanisms has the NEF used to attract proposals across its programs? The secondly, Chair, is the NEF confident that they have sufficient concrete measures to improve turnaround times? These turnaround times for funding applications, and then also to reduce bureaucratic delays, and additionally expand access to finance for SMMEs, which traditionally struggle to access capital. And could you please unpack these particular measures to improve these turnaround times, as I've indicated? Then the last question to the NES, given South Africa's high unemployment rate, weak economic growth, how will the NEF measure the real economic impact of its investments in terms of sustainable job creation, localization, industrialization, and contribution to GDP growth? Then, Chair, to the ECIC, how do this APP and plans, strategic plans, position the ECIC to support South African exporters entering into the new African and global markets, particularly under the AFCFTA framework, while managing rising geopolitical and sovereign risk exposures? And how have the geopolitical and sovereign risk exposures affected the plans that you've had, and possibly going forward? What kind of risk mitigation do you have in place to ensure that these geopolitical tensions do not unnecessarily derail the plans that you may have in place? Although these are exogenous factors, and it may be difficult going ahead to determine exactly what those are going to be, but what kind of risk mitigation factors do you have in place? And then lastly, Chair, in the
recording in progress.
The last question, in the light of following on to the other, in the light of global economic uncertainty and fiscal pressures, I've covered the risk management aspect. So final question, what strategies are being implemented to improve support for infrastructure, energy, industrial projects that can enhance South Africa's export competitiveness, as well as stimulate regional economic integration? Thank you, Chair.
Thank you very much, Honorable Koza.
Thank you very much,
followed by Honorable Nkosi in the House.
Thank you very much, Chair. Let us first greet you and the honorable members, both entities, the NEF and the ECIC, for their presentation. Chair, I want to firstly speak to what the Honorable Chance have just highlighted on the question of the leadership gap. We all know that leadership gap signals, one, the instability in an institution. And we all understand that that can heavily impact uh, on the investor confidence in the market. So I'm speaking to the absence of the permanent CEO. It's been quite a prolonged period where we have an absence of a permanent CEO in the ECIC. So the first question to them is, when are we finalizing the appointment of the permanent CEO to the entity? So, Chair, I also want to perhaps propose that as you sum it up, we need to perhaps stipulate or provide a duration in which we expect the ECIC to have concluded on this question, understanding the period, the prolonged absence of the CEO. So my proposal to the House Chair is that if we can give them 3 months to conclude on this question, where they appoint a permanent CEO, and also to request the entity. I'm sure the chairperson of the board is here to respond on that, and also to request the entity to perhaps give us interval reports on the processes that are taking place towards the finalization of the appointment of the CEO. Perhaps they can give us a bi-monthly or fortnight reports that shows the progress towards the achievement of the appointment of the CEO. And also, Chair, to the NEF, I will want to perhaps summarize my question to at least 3 of them, as my honorable members have already spoken to many of them. I will start with the one that was also raised in the House, more especially by Honorable Tring, on the question of township economy and how best do we then ensure that funding does not reproduce small elite class of beneficiaries instead of broad-based empowerment, especially in high value programs like industrial financing. If maybe perhaps we can get clarity on that one. And also, Chair, I wanted to check with the NEF on the question, or perhaps as they've cited that they are experiencing undercapitalization as a major risk in their entity. So the question, therefore, that comes to mind first is that why has there not been a decisive or perhaps a structural solution beyond reliance on third-party funding? And is there any current model, or perhaps is the current model that they are using currently fundamentally failing its developmental mandate? Maybe perhaps they can give us a scope on that. We've also heard through the presentation that the entity is being ambitious, more especially when they spoke of the increase on the disbursement targets. An example is seen on the previous 289 million that was then projected, and we've seen an increase to 600 million for black industries, of which we appreciate that. But the question now is that what concrete or secured funding sources justify this expansion, or is just a return ambition that will never materialize for many reasons? So maybe perhaps if we can get the justification that brings us to such expansion, more especially understanding the undercapitalization from the institution. And then lastly, Chair, I will also want to perhaps understand that despite emphasis on township and rural economies, what measurable mechanism ensures that capital actually reaches grassroots entrepreneurs rather than being absorbed by intermediaries or better positioned applicants. If maybe we can get to understand what are the mechanisms that are being put in place that will benefit our township and rural economics. Thank you very much, Chair and honorable members.
Thank you very much, Honorable Nkosi.
Thank you, Chair. Greetings to the two entities that are here today. I believe our questions are sort of aligned as members, but perhaps the approach is slightly different. I agree that the NEF has outlined very ambitious expansion strategy to us today, but what seems to be growing is the contradiction between the impairment provisions as well as the assumptions around the collections. The question I have is, could you explain to the committee how you intend to balance the aggressive expansion while simultaneously managing what appears to be a structurally deteriorating risk profile? And then the next question I've got is that your APP places significant emphasis on the transformation fund as the centerpiece of the institution's future strategy. Yet from an oversight perspective, there aren't any material governance gaps that remain very unclear to us. You guys have not given us any information in terms of how you plan to operationalize the fund. And I would like to know what specific governance protections will exist to ensure that the fund does not become vulnerable to politically connected beneficiaries or state capture dynamics. My next question is around the transformation fund. How do you ensure that the measurable economic returns on public development finance will actually be measured against the benchmarking? So institutions like the IDC or comparable international FDIs give us job per metrics. For example, you guys spoke about one of the organizations where, for example, the ratio is 345,000 Rand to one job created. The question then is, how do you guys use, what metrics do you guys use to measure the return on investment? Because currently, it could look quite, sustainable, but the question is, what is the matrix that you guys use? You give us figures, you used 58 million, you provide 141 jobs as an example. So what matrix do you guys use for that? I think I'll pause for there now, Chair. Thanks.
Thank you very much, honorable members. And the NEF, if you can maybe share with the committee your current balance sheet, so that we have a sense. And secondly, the encumbered funds that are provisioned for 2026-27 for normal deals. And then thirdly, just an update on those third-party funding, which in our view, have expressed our view that they are very stringent and difficult for entrepreneurs. If you can just give us a sense, what is an update? Are there any possibility of relaxation? Is there an uptake on what is the status with regards to that? I think colleagues are saying that your APP presents very high ambitious APP targets, but in reality we know that financially the NEF is in a much more weaker position. Are there any, we've made some recommendations to the department, to yourselves, to IDC with regard to recapitalizing the NEF. If you can talk to us with regard to what is the status now. And finally on the NEF, if you can just explain, the relationship of the NEF and the transformation fund, and whether or not potential doesn't exist to blur the lines, because NEF has been doing a lot of great work on the ground, and there is aspiration for transformation fund. Will these two function not confuse their role and responsibilities responsibilities to an extent that it impacts on the work that is done to support industrialists on the ground. On the ECIC, so if you can just explain to us the legal status after South Africa's accession into the Afrexim Bank. So what is the role and how do you differentiate between the two? We know with the bank, they've pronounced on certain funding, like two streams in the main, and the fact that we'll have access to larger markets. What is now the legal status in the true sense, so that there's a sense that there are no duplication of role with regards to that. I think the secondly was around the issue of the appointment of the CEO. So I have to emphasize it because it's a major issue. And there are proposals on the table which I'm tempted to agree with because it's been long. We've been here for over 24 months ourselves. This is the first thing we started from here to say we need to ensure that we can conclude this. In your almost 7.5 billion budget, very little is being spent, and from what we are picking up, there's like two main projects which would like you to detail, including their transformation endeavors, because we've seen some of the names there. If you can just talk to us about those, what is their value? Are there any prospect to further transformation or broad base with regard to those transactions? And finally, just the five largest exposure. If you can highlight those, especially their silent features, with regard to transformation, we'll also appreciate that. So I will hand over to yourselves and the team. Yes, Honorable Chance.
Sorry, Chair, just to follow on from that and your point about Afrexim Bank, I'd just like to get an answer to the question as to why we need a South African Exim Bank when we've just acceded to the Afrexim Bank. Why do we need both institutions? What is the South African bank going to do that Afrexim Bank can't do?
We'll start with NEF, probably allocate you about 20 minutes or so, as well as the last 20 minutes to ECIC, and then we can close the meeting.
Thank you very much, Chairperson and the honorable members. I will deal with some of the questions and then my colleagues will assist on the others. Firstly, on the issue of how are we going to track this shift that we are saying we are embarking upon. Now we're moving from just having KPIs to actually having outcomes. So when we're saying we are investing and the investment that we make, we say we want to achieve a certain number of jobs. So what we're saying there is that in terms of the reporting mechanism and also in terms of how we account, how we actually achieve the KPIs, that is tracked on a monthly basis and at the end quarterly. The reports do come to this committee in order to track the outcome. So that is tracked. I think the commitments that we make, then we actually track them on a monthly basis. So there will be a clear monitoring of the performance to ensure that what we're committing to do, we are achieving over time. On the issue of jobs, so in terms of the proposed or the new APP, we are saying that we are going to be creating 4,200, that's new jobs, and then we're going to be saving 6,300 jobs. That's jobs that were lost, that are returned. In our view, they also fall in that category of new jobs because those jobs have been lost. You are actually bringing them on board, and then we'll be creating about 2,500 job placements. That's about 13,000. And now if we look at that, because the question was asked about the cost per job vis-a-vis the budget, if we take the 1.5 billion rand, you'll see that the cost is around 142,000 rand. So how there's a different approach to job creation in various sectors. Some sectors are more job intensive, and this is benchmarked against the acceptable industry norms. And our view is that our cost per job is actually not out of kilter with the applicable industry norms. That's on the issue of cost per job. Now, in terms of ensuring that what we do is sustainable, and I think this is linked particularly to the issue of township businesses and SMMEs. So how we actually fund businesses, we ensure that the funding actually talks to the target market. There are certain businesses, when you look at the businesses, particularly if you look in the rural areas, if you're funding cooperatives or businesses where you are creating jobs on a large scale, that means that you cannot fund those businesses by loans only. So you do need to blend your funding. You do need to actually have access to some grants. And what we do is that we partner with various industries. So we get some of the funding from the private sector that actually specialize in those particular sectors. We do have partnership with specific industry related industry, companies, and also with other government departments. For instance, we've got a partnership with the Department of Tourism. When we fund tourism businesses, then there will be a portion of that funding that is a grant. It's not a big amount, it's up to 5 million rand. But what we've seen is that has gone a long way in ensuring some of the projects, particularly in the rural areas, because we do fund tourism establishment in rural areas as well. Those who would otherwise not have been affording to get the funding, then they become commercially viable because of the extent of the grant portion. And the other example I can make is a partnership we have with the province of the Northern Cape. So there the provincial government has allocated funds to say in projects within our province, we are allocating a specific amount which you can use to blend the funding. And we've seen a lot of traction in terms of new transactions that are coming up in those provinces where we have those kinds of partnerships. Now, on the issue of BEE and also the NEF mandate, BEE over the last year or so, it has become topical, and I think the DTIC has actually brought back the agenda on the table. And I think it's a very important conversation to have because in South Africa, we live in an unequal society. And what we're saying is that as government, we're playing a role in ensuring that there are opportunities that are created and that everyone is afforded the opportunity so that the economy is inclusive. So our view as the National Empowerment Fund is that the economy of South Africa needs to be inclusive, and the transformation of the economy cannot be separated from the economic growth. I think the country is doing itself a disservice if it's going to approach the issue of economic growth without actually bringing more people within the economic mainstream. And hence, we are actually promoting the issue of BEE. And we do take the point to say BEE needs to be guarded so that it continues to be broad-based. We agree with broad-based Black economic empowerment, and we continue to implement it. And if you look at the investments that we've made, the NEF is not, we're not politically aligned, and we're not a political party. We fund everyone, and we're not focusing on certain connected people. We fund all South African, whether they are politically connected or not. And we actually make the information in terms of who's funded by the NEF. We're a public institution. And I can assure the committee that the majority, almost 90% of our investees, they have no connections. They have not been funded because they are linked to specific people. They'll be funded because they are South African and they've got deserving projects. And I think that's a very important thing to make. But I do want to make the point that we do not exclude people simply because they are politically connected from the funding. We will actually we do have measures in order to deal with those particular transactions, but those are transactions, if there is economic merit, they are definitely supported by the organization. In terms of the audited numbers, yes, indeed, in the presentation today, we have not provided any audited information because the presentation was focusing on the APP and the targets for this new financial year. We were not reporting on the performance. And hence, some of the questions, we've taken the questions that the committee has asked in terms of the past performance. That's information that we were going to present to the committee when we come to present the annual results of the organization, because what we do when we present that information, we do actually do the comparison to previous years. So we'll take guidance from the committee if we should submit that information by means of a written response or present it when we come to present the annual results over the next couple of months, because that presentation is also going to be due to, to the committee, and then that detail will actually be provided then. And then maybe in terms of the, and that also talks to the issue of the historical record on the Black Industrialist Program as well as the Spaza Shop Program. So, Chair, with your permission, on some of these programs, like the Spaza Shop Program, we will request that we provide written responses because there are detailed reports in terms of how those are performing. Those projects are progressing and will provide the necessary response. And in terms of industrial parks, we finance industrial parks not only focusing on the privately owned industrial parks. We fund the government-owned industrial parks. We also work with the private sector. Indeed, there is a question that was asked about a specific partnership with a company. I think Honorable Chance mentioned cost base. So we deal with that particular relationship in the context of all the other private sector relationships that we are working with. And I think there are negotiations that are taking place there because anything that we bring on board, we need to make sure that in terms of the economic rationale to the government, in as much as in most instances we agree with the business cases, but we need to make sure that there is alignment in terms of what the state is putting on the table and what the private sector is bringing on the table. And that's where those conversations are, and we continue to have them. And if they yield positive outcomes, we will we will report to the committee accordingly. How do we attract applications or proposals for our programs? So we do from time to time publish information on social media and other public platforms. We hold workshops in the various provinces where we disseminate information about the NEF's products and offering. So in terms of what we offer, it is publicly available, and anyone who would like to approach the NEF, they are welcome to do so. And we've now even went into the electronic methods of receiving applications. We've seen an increase in applications. There are certain people in some areas that we were not reaching frequently that we are seeing an increase in terms of the applications that are coming to the organization because of the initiatives that we are putting in place and the methods that we are beginning to use in order to attract the application. Now, maybe on the issue of the transformation fund. So I actually listened into the committee when the DTIC was presenting its APP, and I think similar questions did come up. And I think from our side, the reason why I did mention to the committee that this issue, it was reported on through the minister's office. It's from a protocol point of view because this is a project of government. It's not an NEF project. Yes, we are the project management office of the transformation fund, but I don't think it would be proper for us to actually be giving that details without actually the leadership of the minister. So, Chair, we will actually, maybe through the written comments, we will work through the shareholder in order to provide the responses on that to the committee. And indeed, Chair, in terms of measurable returns, we are fully aligned with what the committee is saying in terms of saying we need to make sure that what we invest, we actually are seeing the returns thereon. And the CFO will touch on that in terms of when we put money out there, in terms, firstly for us, because we're not receiving money on a regular basis in terms of recapitalization. So it means that the money that we invest, we do need to make sure that it does come back so that we can reinvest. And hence, one of the slides we've presented is a slide that shows in terms of what we've invested, the 11 billion, we've collected 8 billion rand, and then there's still 2 billion rand that's sitting in the book. And indeed, we do lose some of the money because when you take a development mandate, that is a risk you have to accept. That, and I think it's not something that's unique with the National Empowerment Fund. If you invest in development projects, some of them will not go well, so you will lose some money. But the important thing is that when that happens, you need to make sure that you've taken the necessary steps in order to ensure that you give those businesses a fair chance, and also you need to make sure that the governance around those businesses and also our monitoring processes were intact. And then when that happens, then we accept that we would have lost there. But what we always caution on is that the amount we lose or the amount we collect should actually surpass the amounts that we've invested. So despite the monies, the CFO will touch on that, despite those that actually go bad, the amounts that we actually get from those that go well actually exceeds the amount that we've actually invested in the economy. And that's the balancing act that you have to maintain when you provide development finance. And that's how you actually look at the returns. And hence we focus on high job creation projects or projects in the rural areas, because the dividend that you get, maybe not in financial returns, but from creating a job in an area where there is no economic activity, or in a township where there is high unemployment, is much higher than the cost that we have incurred in some of the losses that we have actually incurred. Through you, Chair, I'll pause there and allow the CFO and maybe Ms. Donise to come in.
Okay. Yeah, thank you, Chair. I will also just to add on some of the points that the CEO has already made. As the DFI, National Empowerment Fund, we exist where there is market failure, where commercial banks are not willing to fund. That's where we exist. So that means balancing the two twin pillars, which is something that I've already covered. It becomes important to say, how do you fund entities that are high risk, but at the same time you manage the financial sustainability? It is something that we continue to refine, but when you look at the numbers, 11.5 billion has been deployed, 8.4 billion has been repaid. So what it means is that our methodology do work. We have been balancing financial sustainability with the developmental effectiveness, but we continue to monitor and review on a continuous basis. So I will then link that with the impairment as well as the collection. So the new accounting standard requires that it's forward looking. On day one, we should be able to estimate how much we're going to lose. So what we have done is that with these changes, we took the existing loan balance beginning of the year with the impairment, and then we apply the new formula. Remember, it's a matter of formula, not necessarily that our loan book has deteriorated. So once you apply the formula, the new formula on the same data, you get an additional impairment of around 7 to 10%. So the increase on the adjustment on the impairment targets, it's mainly due to the new accounting standard. However, and the reason why we had to have that 40% is because of the residual impairment. But with time, we've got plans. That's why you can see that over in the year 3, year 4, it goes back to the 30%, because by then we won't have the residual impairments. But some of the, as I said, that we continue to refine and review. So, for example, we've got an approach on our portfolio. We have segmented it accordingly to say so much percentage must go to low risk transaction, which we classify it as a class A, so much goes to class B, so much goes to class C, so that when you aggregate together, you can then be able to maintain financial sustainability while you are fulfilling your mandate. So that's how we continue to make sure that we balance the two. I'll also touch on the turnaround time. So we have reconfigured our pre-investment to make sure that they also do the pre-screening of the transaction, so that by the time transaction goes to the funds, at least the initial work has been done. So in that way, it will help to reduce the turnaround time. We are also working on some IA tools that are going to help with the screening as well. So in that way, it will be easier. But we also need to balance, because there are transactions that are coming. They have not met the regulatory requirement. So the question is that, do we have to ignore them completely, or should we consider them for approval, but with the understanding that it might take a while for us to disperse? So, but with that, the advantage is that when you have that approval letter, it's easier for a regulatory institution to listen to you, because at least they can be able to see that there is a funding that has been secured. We just need to unlock the bottlenecks and then be able to disperse accordingly. So we'll continue to reduce the turnaround times. I think it is, it's one of our KPIs, but at the same time, we'll also try and balance to make sure that we accommodate. For example, I think there's around 50 farmers that we are considering for approvals. So, but with that approval, we have then there's an amount that was allocated just to deal with the compliance issue, water use licenses, because without those interventions, there is no way that those farmers will be able to comply. But what it means is that we could have the impact in terms of the turnaround times. Yeah. So I'll be checking some as we are moving along.
No, I think through you, Chair, the rest of the questions, there's certain data, like the investment per province, per sector. If you allow, Chair, we can provide those by means of written responses.
Thank you. Board member?
Thank you, Chair. With written submissions coming, I just feel that I should touch on the issue of the brand concerns of the entity. As indicated, there has been a narrative that most of the beneficiaries are politically connected. It has come to our attention as a board, and honestly, we wouldn't ignore to say those allegations are unjustified. However, we have tried to put measures in place to ensure that the perspective is changed. Sometimes the narrative would set in, or it would make sense when you're on the other side of the fence. But one of the key challenges that we've identified is that being underfunded, you would find with the 1.5 billion, you get 20 applications that sum up to 15 billion. And of those 20 applications, 15 of them qualify for funding. But because we need to diversify and ensure that we don't duplicate in terms of the businesses that we fund, some of those, in inverted commas, will have to fall off or would have to reconsider them. So those that meet the requirements or pass the means test, it is then easier for them to believe that they didn't get funding because they are not politically aligned or affiliated, or their applications motivated by any politician, which also then talks to why we have to go out there, explain these challenges, because if we on the end are just quiet and receive the criticism without justifying our actions, then it just further perpetuates the narrative. One of the other things that we have looked into is that we would find that most applicants come from the urban areas, which makes sense because they have access to this information, and for them it is easier to keep applying, even though the narrative is that they might not qualify. But then with the rural and township, one of the major challenges is it comes to licenses. Municipalities, they take forever to assist with compliance. Business licensing is not regulated in rural areas, and then the kind of businesses actually need to be licensed. You'd find that municipalities have to now overhaul their policies, and they don't necessarily come to play to say there are targets that need to be met. We need to meet the national entities halfway. So those are also things that we're looking into to try see how best then can we be assisted, even through the committee willing to say how then do we talk to local government to make sure that when it comes to issues of transformation, we cannot then be stagnant and stick to policies that
ordinarily would not work if we were not pushing for transformation. So we really are working hard to try make sure that the bulk of the budget does not go to urban areas, because the transformation is mostly needed in rural and township economies. Thank you, Chairperson.
Can I also allow online the board chairperson, because the questions directed to your good self? Thank you. Just very briefly, because the colleagues have taken more time. Oh, sorry, it's ECIC. The board shows is ECIC. Yeah. Okay,
Yes,
sorry.
Chair.
Yeah, apologies for that confusion. You'll come in. You can come in there. ECIC, you can proceed. Maybe we'll start with you, Chairperson.
Okay, that's fine. Thank you very much, Honorable Chair and members. Let me address the acting CEO position and the length of time that's been taken. All I can say at this point is that we are mindful of your concerns. We understand the optics, that they are challenging. The process is now at cabinet stage. So we are hoping that by June, we will have a permanent CEO. So the request for us to submit progress reports on a monthly basis is welcomed, and we are prepared to do that, to give you updates in terms of where the cabinet process is at. Hopefully that suffices as an answer. And then just in terms of what was mentioned around why would we need an Exim Bank in South Africa if we are a shareholder in Afri-Exim Bank? I feel compelled to answer that one before my colleagues, to say, for us, an Exim Bank would serve a distinct and complementary role. It would provide domestic anchoring, where the Exim Bank, it would be an instrument to mobilize capital for emerging businesses that are usually rejected by the commercial banks. I am familiar with the energy space through colleagues that I work with and engineers who will come with frustration. For example, I think it will be helpful to just illustrate some of the frustration is that you'll have a lattice steel company that is partially funded, say by a DFI, up to 67%, and they still need private capital to crowd in private capital and this lattice steel is absolutely critical, given the critical importance of steel in modernizing our grids. For Eskom, for example, it is needed across Africa, where all African countries are looking to eradicate energy poverty. But that particular company is struggling to get funding for the remainder, the 33% that they still need to ensure that they're properly capitalized. So in a case of currently what we can do without a lending arm, we can provide guarantees to de-risk a transaction where such a lattice steel startup wants to go to, say, Guinea-Conakry or any of the West or East African countries. But with a lending arm, we would be able to partner with the DFI and co-finance alongside them in such a deal. We would be able to, for example, provide short-term trade finance alongside the commercial banks. And to the extent that we're providing the guarantees, that would also ensure that we are encouraging commercial banks to do the right thing as well. And I think an Exim Bank in South Africa would ensure speed and proximity to market, ensure that decisions are taken closer to home with a deeper understanding of local firms, like I've just illustrated with an example, as well as sectors and constraints, especially for emerging exporters who require more tailored support. And thirdly, I think it would enable greater leverage of partnerships rather than duplicating what Afri-Exim Bank does. The SA Exim Bank would act as a gateway and a multiplier, originating transactions locally and then crowding in institutions like the Afri-Exim Bank for co-financing and risk sharing. So for us, it's not an either or, it's both and complementing one another. So on the geopolitics, I would like to say that as the ECIC, I am really impressed with the underwriting and risk management discipline. So we've got disciplined risk intelligence, and and then for exporters in a more multipolar world, which is more polarized and uncertain. We are it's become more structural. We are making sure that our instruments that we use are tailored to protect exporters against currency inconvertibility, for example, which means transactions will happen even in uncertain markets. And in order to protect ourselves, you will hear from the acting CEO just now about how we are working with other peer export credit agencies from Japan, for example. We've already implemented that agreement. We're looking to sign ashore to ensure that they provide reinsurance. The acting CEO mentioned 62 Japanese companies that are establishing in South Africa with a view to exporting into the rest of the continent. And we've said to them, we can enter into a risk-sharing arrangement with you. You can also even provide reinsurance to us to enable your exporters from a South African base to go into the rest of the continent. What that does is it means that we are contributing and moving towards an export-led inclusive growth. So I thought I should answer those at a high level and then hand over to the acting CEO. Thank you.
Thank you, Chairperson. So I will deal with some of the questions, some I will defer to my colleagues. So the first question that was asked was around the expanding role that we're playing in high-risk market and how are we managing the contingency.
Please speak closer to the mouth.
Okay.
To the mic, sorry.
All right. And how are we managing the increase of the fiscal exposure to government? So I think some of the answers, the chairs touched on them. So we do a detailed risk analysis of the project. Some of this project is a question of how you structure it. And I'll give you an example of a very nice project that we did in Zimbabwe. It was the border post improvement on the side of the Zimbabwe, where there were currency issues. But the border post transit fees are paid in dollars and rands. And they're generating, a lot of revenue. They're generating a lot of revenue in that regard. And what we did there, when we started the transaction, we created an escrow account where the collection of the revenue is offshore. And there's a distribution waterfall that applies to that account where the funds are prioritized to debt service and operational costs, and what remains, it gets transferred to government. And in that deal, we did not even request the MOF guarantee. We did it truly based on the revenues that are there. That showed that the project is economically viable. Then also from our side, in terms of our balance sheet, the reason why we're exploring risk sharing arrangements is precisely to manage our exposure. I think we did show when we look at the FPP that we are targeting about 25% of portfolio to be reinsured through guarantees and reinsurance. Obviously, we would not get reinsurance, we'll get guarantees in place. And another measure that we'll be utilizing is after financial close, we'll be encouraging our bankers to reduce their exposure through syndication or selling down post financial close. And we've got a transaction like that we're going to do, which we just closed recently in Angola, where we're going to engage one of the DFS on the continent to take a piece, of that debt, and that will reduce our overall exposure. So these are some of the measures that we are putting in place Then there's also a question around the Exim Bank. Whether the Exim Bank together with the ECIC, will there be a duplication or not? You know, the insurance versus the guarantee. I think as the chair has alluded, there is Exim Bank is a very distinct entity. And for us, we do need it for various reasons. You know, we've got a lot of, unbankable clients, that are not banked by banks, and that need risk capital funding. So part of the bank's mandate will be to provide loans and guarantees where needed in the form of blended financing to assist a project. There are certain industries that cannot be funded by the Exim Bank as well. Your aerospace and defense is a classical example. Not a lot of banks, especially South Africans, because of the condition that they've got in the credit lines. So I think that's where the Exim Bank will play a big role. And then I see a complementary role between ECIC and the Exim Bank. But that also depended on the structure that we'll agree if eventually, whether are we rolling ECIC into an Exim Bank or do we have two parallel structures that coexist. But the two can coexist. Then there was also an issue about the number of SMEs that we are targeting, 20. I think what we did when we did our analysis, and I think we did disclose the fact that we did not have a benchmark for this because it was never a target for us previously. We've looked at the number of deals that we're doing, and especially one of the big transactions, the Moses LNG, where we've seen, in fact, there's a lot of South African entities that are providing services, to that project. The only problem is that it was affected by the insurgency, and then there was force majeure, but now it has been restarted. And there are engagements, as I'm speaking now, with the EPC contractor to really focus on accessing the supply value chains in SA. And to look at the SMEs that can provide those services, and they are. And another example that I can give on the water treatment plant project in Angola, we discovered that South Africa does not have competitiveness to manufacture flanges. These are the joints that are used for pipes. You can only get them now from India and China at the cheapest price, of course. And with the project sponsors, we tracked some of the guys that use to manufacture, those components. And they are willing to do it if they get a piece of this contract. Here we are trying to reindustrialize again. So we are hoping that there will be more SMEs, like that will be able to support. And then over the strategic period, that number of SMEs increases. Some of the SMEs that we support, which are not catered in this number, is through our enterprise development program, where we've got a whole lot of them that we assist them. So those will feed into that number. That number will increase. It's not going to stay 20, but I know we're targeting 20 because we don't have the baseline. Then there was a concern raised about our income diversification. We seem to rely heavily on large projects. Yes, I think I will also ask the CFO when she chips in to talk about the earnings pattern, how we underwrite the gross return premium and earn it over the life of the period of the policy. Then I will leave the question to fund managers to the CFO. And then there's a question around how do we plan to increase the participation of youth, women, and Black industrialists in the project that we support. We do have those requirements where we do ask the sponsors to look at the specific, issues to address the SME needs, the youth. Where there's competitiveness, they need to be able to use them. Obviously, some of these projects are of higher technical nature that we're supporting. For example, the Moses LNG is one of those, but there are areas where SMEs can find a place, especially in the services space for that project. And we have had those discussions. So even with the facilities that we're putting in place with the banks, there's also emphasis to support women and youth-led women and youth-led businesses, as well as Black industrialists. And again, as part of our enterprise development, we do support women and youth. We'll show those numbers when we report on our performance. And then there was a question around the investment in the ICT. Yes, we are making strides in this regard. We are investing in the CRM. We're also investing in the IMS. I know there was a question from member Charles around why has it taken so long to do this. We did try before. The biggest challenge that we've had is that you do not get a bespoke system that manages an ECA portfolio. So most of the entities that we engage with, such as Italy, they develop the system in-house. So you need to bring that skill in. You need to make a serious investment. And I guess at the time when we looked at the number of the policies that we manage, which were no less than 20 at some point, the increase, in 2010, 25, then we started having 40, 45, and then now they've also decreased. I think it was that balance of investing in every system, yet the business does not drive it. But I think now we've got a business case because the short-term insurance business relies on the system. If we do not have the system, we're not going to make all efforts. We're taking all efforts to have that system in place. And rightly so, I think the time is opportune because we're also pivoting from the medium to long term to short term. And then there's a question around Afro-Exim Bank. For me, Afro-Exim Bank is a strategic partner in many ways. And I guess maybe the issue that needs to be lamented is the fact that it took long maybe to accede to the Afro-Exim Bank agreement. And if you look at the benefits and the kind of financing that they can provide to a country, it's massive. Look at Nigeria. They bankrolled Dangote's refinery. More than $20 billion went into that infrastructure. So that is the scale and benefit that you can get from Afro-Exim Bank. And I think in our case, there are programs that have been put in place that they are targeting. And I mean, they will continue. And also the fact that they also have relationships with our commercial banks. Some of them are shareholders. Standard Bank, RMB, PIC. So there's a lot of synergies and common understanding in terms of how do we develop the continent? What kind of blended financing do we need? And I think we've seen the rank and the profile of Afro-Exim Bank and what they can do. And I think it's very impressive. And for us to be a shareholder now in Class A, it does give us the ability to participate in key decision making, the appointment of the CEO, and also the strategy, driving the strategy of the bank, which is very good. Then there was also a question, why are we not using artificial intelligence? We have developed the policy internally, around the use of artificial intelligence. Obviously, these products, there are quite many, some of them are with risks that we need to manage. And we are looking at using them, especially to enhance our underwriting, activities and processes. So there is a fair amount of adoption, but yes, as time goes by, we'll increase it. But we need to understand the inherent risks in utilizing some of the system. What kind of information can we put it? Who's assessing it? Who's managing it? Do they have links to other intelligence organizations that are just, collecting information or not? So that becomes a key point. Then the issue of diplomatic collaboration with DECO. Yes, we are. And I must say that DECO has been very helpful in many ways. When we had issues in Ghana, we were very reliant on the High Commissioner there to arrange meetings with the government, to give us access to the politician there, and also to update us in terms of the politics in the country, because there have been elections, one party takes over, and to understand whether from a policy perspective, do they have common views around the fiscal issues, the energy crisis that they had. So that discussion was very key, and I think that will continue. In fact, they even wrote to us that we need to give them our diary in terms of the planned activities, the visit that we're intending to undertake. And we've been with them in Senegal. I was in Algeria not long ago, where we signed the MOU. They were there to support us. So I believe that collaboration will always continue, and we need it for our business because they are our diplomatic currency. When things go wrong, we have to rely to them together with the GTIC officials. Then in terms of capitalization of the Exim Bank, there are preliminary thoughts in terms of how the bank will be capitalized. Obviously, we need the bank to leverage private capital. So the way the bank will be structured, it will have a private shareholding, obviously to raise funding, to fund the bank's activities. And then there will also be the contribution by the government. There will also be loans that will be solicited from other, jurisdictions. And then those discussions have happened, wherever we've been with the minister, he does ask the guys, what is the funding package you can avail, and then it's up to us to decide how we allocate it. So I think I've got no doubt there that the bank will be kept. The initial thinking was, can we look at 20 billion? But that was just a provisional figure. But we need to run the model to see what is the required blended equity and loan structure that will sustain the bank, especially in the early years. And then the grant funding part of it that will be required, how much. So we need to run this exercise, frame all our proposals so that when we come to the committee, we are presenting a solid proposal that has a very good chance of being approved. Then the legislation, yes, we have worked on the draft, but it still needs discussion in terms of the structure that we will eventually adopt. So we've got options there in terms of which structure do we look at, which one is more favorable or not. And then I will leave the council tribute to our HR manager to answer that. Then in terms of the jobs, I think there was a consternation around the fact that we should 128 jobs for one project, but we are now targeting 10,000. And this is informed by a number of projects that we've got in the pipeline that are now going to execution phase, like the one that I indicated, the water treatment plant in Angola. Then we also have the facilities arrangements. The first one will be with APSA, that is highly advanced. We are now turning around the draft agreement, and that template, we're going to use it for other,
Recording stopped.
We're going to enter into it with other banks. NetBank is interested, Standard Bank, all the big four banks, they are interested in that arrangement. In fact, we're even going further to look at the aerospace and defense industry to see what is the assistance that we can give. Because if you assist Denel, you're not just assisting Denel, there's an entire value chain underneath it, that support those contracts. So we're hoping that a lot of jobs will also come from that. And discussions between us and some of the big players in aerospace and defense are highly advanced. We're even engaging with the bankers to say, to what extent can we restructure some of this contract? Where ECIC take the risk to release the advance payments that have been made, as working capital.
Recording in progress.
And then the issue around 138 meters 80, I think the income, cost income and the combined ratio, the CFO will deal with this. Then how does the APP plans to position, ECIC to support exporters to take advantages of the opportunities that are offered under the ACE, FTA? Yes, this is our concerted effort, to do that. Obviously, we're also mindful of the sovereign risk exposures. But when the transactions that we look at, we do structure them in such a way that we are also managing the sovereign exposures that we know of. And for example, the Zimbabwe transaction. And if you look at all the border posts, even South Africa, yesterday, they were announcing different border posts that will be funded on a standalone basis, depending on the revenues. And for us, we've got about 4 or 5 transactions, around border posts. And we're going to structure them on the same basis. Ring-fence the revenue, don't rely on the sovereign, and rely on the economic viability based on the traffic studies that we've done, and also based on the fees that have been paid, whether the project can stomach a certain level of debt or not. That will be the base on which we'll support these projects. And then what measures do we have in place to manage geopolitical risk? I think the chair has touched on that. You know, it's a very interesting question because sometimes it depends on the impact. If you look at the war that has just ended between Iran and the US, it has led to high energy costs. Now we run the risk of high inflation and interest rates going up. And that is a dire situation that is going to be felt. Some of the countries are going to suffer around this. So I think for us, the question of being aware, analyzing the risk, what does it mean for business? Can we manage it? Can we underwrite it? So those will be the questions that will put in place before we make any decision in terms of underwrite. And looking at how the project is structured. It doesn't mean that when there are, challenges, you cannot underwrite good projects. You can. There could be private sector-based projects that are on a standalone, not dependent on the fiscals or the sovereign. You can still look at those. Then the other question was around what strategies are we putting in place, to improve South Africa's competitiveness. And again, here, I'll give an example of the aerospace and defense industry. It's a very clear example. I mean, if you look at the figures, last year, the whole industry contributed 10.5 billion rand worth of exports. And the majority of those exports, they went to Europe. And the second area was Saudi Arabia. And there's a big opportunity here to really support our aerospace and defense industry. It's a very strategic sector. It really needs the support of ECIC to turn things around. And we are making some progress in that regard. And then the issue was around explain the latest, the accession to the African Bank agreement and what is the status of ECIC in that regard. And again, as I've said, it enhances our chances in many ways. African Bank is the biggest player in terms of trade finance on the continent. They cannot fill that gap on their own. The gap is about $5 trillion. When you look at the infrastructure, the gap is between 140 and 170 billion dollars a year. So they're not making a big dent, so they need a lot of partners, in that regard. So even in South Africa, with the funding that they're providing, they cannot address the needs. The needs are just too much. So they need to collaborate with us. They need to collaborate with commercial banks locally. To make a concerted effort to support economic development in South Africa. And in terms of the big projects that demonstrate transformation, the Zimbabwe transaction and the one that we did, improvements on the bed bridge, some of the entities that supported, they were purely owned. Pambana Remgo is one of them. And they were also replaced by another two, black-owned companies. We just closed the transaction, I think. We approved it in just before the end of March. So there's big participation by black-owned business. And they're also getting experience. They're investing in border post. And there's a whole lot of transactions that they can also participate in them. And then the other transaction is Nakala Corridor, which we did some years back, around 2017. There's a South African company that provides locomotives, on a lease basis to that transaction. Then we also have Vuga Timber, which we did not long ago, or as part of our STI. This company is based in Mpumalanga. They are supplying food and timber poles to Mozambique. Then you also have the yellow equipment transaction. This is a transaction that is on. We had a meeting, in fact, this morning, just talking about how do we fast track it and get it going. It's led by a black-owned business. This is a transaction that's about $450 million. So our cap is about 308 million. And it will be used to supply yellow equipment, goods, and other equipment to the DRC. And there's opportunity to do more because the needs are so much there. Then I think the question about why do we need the Exim Bank, that has been answered and covered by the chair. And then I'll defer to my colleague to answer the specific questions.
Okay. Thank you, Chair. I will just add on to the question about the reliance on lumpy business. So that is informed by the mandate that we previously had, where we were supporting capital goods. So by their nature, capital goods are more capital intensive, which tend to be lumpy. But our mandate was recently extended, where we were now also supporting short-term business. So as the ACO also mentioned, that business is fairly new, and we are aiming to ramp it up. And we've also done a pair analysis with the other ECAs, where we also noted that they do have a large percentage which is coming from the short-term business, so which is where we would also like to go. And then in terms of the fund managers, in total we have 10 fund managers. 8 of them are South African entities and 2 are foreign entities. So of the 8 that are South African entities, 6 of them are black firms or black fund managers. And then in terms of the combined ratio, the 186, which is on the baseline, was as a result of a claim that we incurred on a diamond mine in Lesotho, which was experiencing challenges in terms of its reserves. And those challenges were magnified by the COVID impact. So because of that claim, then it meant that our combined ratio increases. And how we will manage that going forward is through monitoring our pipelines and providing support to those projects that are in distress. For example, you will find that some of the projects are not able to service their loans, so we will agree on a restructuring where maybe we delay some repayments to give the project breathing room for them to be able to make those payments. And then the other thing that will also assist is the conversion of our pipeline, because if we convert that, then we are able to increase our revenue, which then reduces the cost to the combined ratio that has been set. Thank you.
Honorable members, in respect of the question about the cultural entropy, we would like to report that 2023-24 was the first time we conducted a cultural entropy assessment, where we then achieved a high entropy score of 47%. We have put in place plans to reduce that entropy score to be below 15% over the next few years, and to ensure that we focus on the necessary cultural shifts. We're going to be assessing cultural entropy on an annual basis, and supported by our board, we are confident that we will achieve the desired cultural entropy rate. Thank you.
No, thank you very much, colleagues. I think we have had extensive engagement with both entities. Let me take the opportunity to thank the leadership of the board and the executive of both entities. Thank members of parliament for their always rigorous questions. Posit that we will obviously be using these APPs now to hold you accountable on a regular basis. And we intend, we have spent the last 2 years visiting some of the hardcore programs of the DTIC, including the SCZ. We intend doing much more oversight in other areas of work. I think we stated that yesterday in some of the entities we're dealing with. so that we can sample some of the work that we are talking about, including some of these figures to test them on the ground, whether or not things are happening as much as they are happening. But so far, we have a sense that there are areas of concerns, including governance issues, which has to be attended to. I'm happy that the chair of ECIC, Madam Ndlovu, assured us that the process has moved to the cabinet level. We would like to settle that matter of the permanent CEO so that we are able to move forward. The other issues I think has raised by our colleagues here, we will obviously be making necessary follow-ups at the level of the NEF, at the level of ECIC, just to make sure that things are properly aligned and we can use these APPs as a yardstick to do our work in terms of the money bill here in Parliament. We are happy, and I think we can safely adjourn the meeting, and thank you very much to all the members. Just before we conclude, we have a physical meeting next week on Wednesday with the board of the IDC and the management. There's quite a number of issues that are coming up, so would like to request members to prepare, but also to get our top table here to prepare some of those issues so that we are able to hold the IDC accountable in the next week, Wednesday. From there, I think the team will communicate with us. We'll have a bit of time to do our constituency. Thank you very much. The meeting is adjourned.
Is it ACO or ACEO?
ACO, I know.
ACEO. Oh, acting CEO.
Thank you so much. Recording stopped.